Yes, so hi everyone and a warm welcome to our channel. I hope you are doing well. Studies and preparations are going on. First of all, starting this video by saying sorry. Why sorry? Because most of the resources uploaded were in Hindi, English, and apparently there was a 1 hour restriction limit. I didn't know about it, to be very honest, that if a lecture is beyond 1 year, it will not be converted, it will not be dubbed into the 100% English language. Okay, so I didn't know that, to be very honest with you. Hence, now this particular video, IDT HOTS, it is one of the, you can say it is our flagship lecture. So it is one of the very important videos. It will prove to be one of the most effective revisions that you will see before you appear for your IDT exam. So I'm recording this lecture again in 100% English, not dubbed. I'm recording this again for you guys. Okay, for all our dear students from South. Also, another thing, now that we have 2 attempts for the CA final, we also have some time to plan the content and deliver. So going forward for November 26 and onwards attempt, you will be having a batch as well in 100% English and resources, revisions also in 100% English. That is my guarantee, that is my word. IDT HOTS I had already promised on Telegram, hence I'm fulfilling that, and going forward also I will be able to upload because now we also have time to properly deliver and plan the content. Okay, just one request, ensure you're sharing it with your friends so that it is able to reach more and more students who are comfortable with only English language, right? So we will start with the lecture, and this PDF I have already shared on Telegram, so you can find it there. There is a link available, in that you can find this PDF, right? So what is HOTS, sir? See, first of all, this is not a marketing or any that kind of a thing. HOTS, it is higher order thinking skills. All the small points, interlink videos, that interlinking points, interlinking parts with respect to the GST, we are going to cover in this particular lecture. Okay, so that is the way we cover, and I have been doing this for past 3-4 attempts, and believe me, this is going to help you. That's all I will say. Okay, so let's start. This is updated for your May 26 attempt. Okay, first we'll be doing the GST part, and then we'll move on to the customs. Chapter number 1, supply and definitions. Let's start. Delhi Development Authority is not a local authority. So wherever there is analysis of local authority involved in relation to the government, for example, renting of the property, if they are giving DDA, DDA is not a local authority. Okay, that was clarified. A Limited is holding 30% in B Limited. This is just an example, but it is not a case of related person. Generally, what I have seen is in the case of definition of the related person, where do we use related person definition? In section number 15, that is valuation. So the related person definition, we have learned that, sir, there is a limit of 25%. No, 25% is not here. 25% is when one company, one person is holding in two companies. 25% or more. So let's say A company is holding 26% in B and let's say 30% in C, then B and C are related to each other. Their 25% limit applies. But if one company is holding in another or one person is holding into another, that needs to be the word control, and control, although not defined directly, it generally means more than 50%. So here please do not apply 25% limit. Yes, next, cost petroleum and profit petroleum. Now first of all, I'm not talking about the sale of petroleum. I'm talking about the share. I'm talking about the profit share and the recovery of the cost with respect to the contract which is entered with the government. Oil exploration petroleum contractor is there, and there is a government is giving this license to go and explore the petrol and oil reserves. With respect to that assignment, with respect to that license, the contractor agrees to share a profit with the government, plus before sharing the profit he recovers the cost. Now this is the cost petroleum and profit petroleum. Some people consider this as a sale of petrol. No, this is not the sale of petrol. Now what about the GST and the taxability with respect to the cost petroleum and profit petroleum? Cost petroleum is not a consideration. It is merely a case of cost recovery. It is only a cost recovery, and that he has done for himself. He wants to earn the profit, so he has done for himself. It is not a consideration for anyone. Profit petroleum is a consideration. It complies with all the parameters of the consideration of section number 7. There is a supplier government, there is a recipient contractor, and there is a consideration involved in the context, in the meaning, in the meaning of the profit petroleum word, and that is ultimately exempt from GST. So supply is there, but ultimately it is exempt. Cost petroleum is not a consideration itself. Ultimate destination, ultimate answer is no GST, but the reasoning and the note will differ. Next, derivatives. They can ask you in the question number 114 marker that whether derivatives which are generally in the form of future or forward, are they under GST? Answer is no. or yes, depends. Now, if they give you that the derivative or that commodity related future or forward has a settlement happening, so there are two options. Either it can be a net settlement happening at the expiry of the contract, or it can involve a delivery of the commodity. If it involves delivery of the commodity, it is as good as supply of goods. There you are going to apply the GST. But if it is going under the net settlement system, then it will retain the nature of derivative, and derivative is a security as per the definition that we pick from Securities Contract Regulation Act, because our GST law does not define security. Okay, so derivative is a part of security, and securities is neither goods nor services, hence ultimately no GST. So in the question you are going to check whether the delivery is happening or not. If delivery is happening, supply of goods. If net settlement, it is a derivative, security, no GST. With respect to schedule number 1, now schedule number 1 structured thinking, you are going to apply that only when there is no consideration under paragraph number 3, which deals with the principal and agent relationship. In that relationship, we are only and only talking about goods. We are only and only talking about goods. So if there is a principal and a normal agent case, sir, why are you saying like that normal agent? Because if it is a sole agent, then paragraph 2 may apply, because paragraph 2 applies for related person and sole agent is covered under related person. So I'm talking about normal agent, and if we are going to apply paragraph number 3, it applies only for goods. Hence we can say that for services to fall under supply between principal and agent, consideration is required, because schedule 1 para 3 is not going to apply. Okay, next, if DCA is an agent under paragraph number 3, schedule number 1. Sir, what does this mean? He's an agent under paragraph number 3, schedule number 1. It means that the invoice test is passed. So basically, I am trying to tell you this point here, that if there is a principal or you can say a seller, and here there is a DCA and here there is a recipient. Now I am saying that he's falling under the ambit. You can find this language, you will find this language in the questions, that he's falling under the ambit of paragraph number 3, schedule number 1. So in that case, this and this are two different supplies, because invoice test is being passed. So here I'm saying that if DCA is an agent under paragraph number 3, interest on loan by DCA to the recipient. You know now what is the meaning of DCA? DCA means an agent with the guarantee of payment. So if the recipient defaults, the DCA is going to advance the loan. Okay, that is the simple meaning. So here in this case, when the loan is advanced, the interest with respect to the loan will become part of the valuation, of goods by the DCA to the recipient, not from the principal to the DCA, by the DCA to the recipient, and this becomes part of the valuation as per section 15(2)(d). This is just for reference, you don't need to learn the sections if you don't want. Okay, so as per 15(2)(d), it will be a part of the valuation. That is just a point to be remembered. But sir, if invoice test is not passed, if this is the supply which is happening, then in that case, the interest will be analyzed separately, and interest with respect to the loan is exempt. Entry number 27, exemptions chapter. Is this clear? Next, there is a factory in Lucknow and there is a showroom in Kanpur, means both are in UP, and there is a single registration visa which I have obtained. It means it is not a case of distinct person. It means paragraph number 2, schedule number 1 will not apply. Without consideration, there will be no supply. Okay, this is also known as APOB. APOB means additional place of business, not a separate registration, and this can get tested in MCQs a lot. In the IDT, the case scenarios booklet, you can find this particular adjustment a lot. Okay, APOB I have already told you. So with respect to APOB, the question will not separately say that, oh, APOB is not separately registered. That is assumed that you know about it. Okay, input of services, structured thinking we are going to do. In case of input of services, if you see there is a consideration, please don't apply schedule number 1. Please don't see you're importing from whom. It is going to be a supply, whether it is in the import in the course of business or not, because we see section number 7(1)(b). Okay, so import of services for consideration, whether in the course of business or not, is going to be a supply. This is first part of analysis. Now this supply may get exempt later in chapter number 4 if it is imported by the government or individual for personal purposes, or even governmental authority for personal purposes, not related to trade, commerce or business, except OIDAR. Now I am slowly linking chapter number 1 with chapter number 4. Point I am trying to reiterate here is, in chapter number 1 we are just focused on whether it is a supply or not. Chapter number 4, if it is a supply, may exempt that particular supply later. Is it okay? So later on it may become exempt if it is for personal purposes, except OIDAR. OIDAR is always going to be taxable. So if tomorrow I am importing some OIDAR service, online advertisement, online e-gaming for not e-game, yeah, online gaming is OIDAR, online money gaming is not OIDAR. So let's say e-gaming for the purpose of some personal, my entertainment purposes. It is not related to the business, but it is still going to be a supply and it will not be exempt. It will not be exempt, right? And the structured thinking second part, if import is happening without consideration, then we will apply schedule number 1, paragraph number 4, which comes with two conditions. Condition number 1, you are importing from whom? It should be a related person or your own establishment. And condition number 2, the business test should be passed. Business in the course or furtherance of business, it should be imported. In other cases, means if this condition is not complied, then it will not be a supply itself. Next, line to be used in liquidated damages. Now there is a part of analysis of certain items in with respect to your chapter of supply, where we basically analyze paragraph number 5, agreeing to refrain, agreeing to do something. Yeah, you remember, right? Agreeing to tolerate. So there the liquidated damages and certain examples are given. At the end of the day, if you feel that you're not able to understand everything, then you have to learn the examples, because that will come as a maybe one part in question number 114 marker. There you have to apply your mind within fraction of second, and you have to tax it or you have to not tax it. So I've given a simple list here. Before discussing the golden line, I'm discussing the list here. Learn it, that GST is going to be applicable for late fees, forfeiture of tour and travel industry, cancellations, lease termination, loan prepayment. So all these cases, there is a element of tolerating something. But other cases, liquidated damages, I will discuss liquidated damages. Others will have the similar explanation. Check dishonor fine, law violation fine, salary bond that you sign. Let's say I'm signing a salary bond with a Flipkart company that if I leave prior to 2 years completion, then I'm going to pay rupees 2 lakh to the Flipkart company. So that 2 lakh is not a consideration. Power fixed charges are not a consideration. In fact, penal charges by the banks, these are also in the nature of liquidated damages. So they are not a consideration. Now here you have to write a line that this is not for tolerating, but it is for not tolerating. There is a mere English word involved by placing this word not before or after. So this is not for tolerating the breach. You know what liquidated damages is. Liquidated damages means the contract is going to provide a clause that if any of the party breaches the contract, that party has to pay, let's say, 1 lakh rupees to the other party. So this is not for tolerating. The other party is not earning 1 lakh. This is just to deter. This is just to discourage the breach of the contract. So this is the golden line I want in the notes that you are going to provide, that not for tolerating, but for not tolerating. Hence it is not a consideration. Okay. So I hope you are able to remember these points. Next, there was one entry asked in the MCQs which had a very typical explanation, very typical treatment. So I want you to remember that a hotel is providing stay to the employee, say 25 lakh worth, out of which 5 lakh rupees of voucher was used by the employee, which was given as a part of employment agreement. Seeing this, even I had a point in my mind that then the 5 lakh should not be under GST because it is with respect to the employment contract. But here what IC has focused upon is that schedule number 3, paragraph number 1, that is the negative list, it says employee to employer. Services by employee to employer in the course of employment. Here the services by employer to employee. So they have not considered schedule number 3 in the MCQs. We are going to, if they ask what is the value of supply, we are going to put the answer as 25 lakh. Is this clear? I want you to learn this. Okay, next. Amount paid to a new joinee not to join the rival firm. This is going to be taxed under the GST. The supplier is the employee who is agreeing to refrain from doing something. Refrain as in he or she is agreeing not to join the rival firm. Sir, but schedule number 3, paragraph number 1 should apply here. No. Schedule number 3, paragraph number 1 is with respect to in the course of employment. This is not in the course of employment. Okay, in the course of employment, whatever the job description will be there, that is the part of employment. But not agreeing, agreeing not to join a rival firm, this is beyond employment and this is an additional service. So this is going to be under GST. Perquisites are a part of the employment contract, no GST, schedule number 3, paragraph number 1, but gifts are over and above the decided contract, this decided perquisites. So here you are going to test paragraph number 2, schedule number 1, because employer, why did I pick paragraph number 2? Because employer and employee are related persons to each other, and related persons, paragraph number 2, schedule number 1, paragraph number 2, schedule number 1 is going to apply, but we have a limit of 50,000. So if an employer is gifting up to 50,000 per employee per financial year, no GST. If it is going beyond that, then that you have to pick it under the supply table, the chapter question number 1. If they ask, then this will be put under supply. Let's say 60,000 phone is gifted, then 60,000 you are going to put it as a supply and charge the GST on it. Okay. But sir, employee did not pay anything back. Yes, but that is the meaning of related person. Na? That's why we are putting under the definition, under the schedule number 1 applicability, that without consideration it is going to be a supply. Independent director remuneration, it is always going to be under the ambit of GST. It is never going to be a salary, because ID can never be an employee due to restrictions on independence, section 149 Companies Act 2013. If the services are in the official capacity, it will go under reverse charge mechanism. If it is a personal capacity, it will go under the forward charge mechanism. Only individual and HUF can be agriculturist. This is just a reiteration of the definition, that agriculturist, only individual HUF is possible. That too, if they are involved in the agriculture, or even if they hire a labor, personal supervision should be involved. Just a point to be noted, father-in-law is not a family. So in Hindi we say sasurji, okay, father-in-law. So that, okay, you call father-in-law, but it is not technically the definition of family. How is this relevant? Family is one of the examples of related person. Family is one of the example of a related person. So in that case, this can be asked in schedule number 1 analysis. For example, import of service from father-in-law. So without consideration, if it is happening, schedule 1 para 4 will not apply. Right? So what is the definition of family? Spouse, children, always a part of family, regardless of how dependent or independent they are. But my parents, grandparents and brother, sister, not my spouse. My parents, grandparents and brother, sister, they are going to be a part of the family if they are wholly or mainly dependent on me. So in the question, they will state my brother is having a factory, my sister is a well-known consultant. Then in that case, they are not a part of your family, because they are earning themselves, they are not dependent on you. Is this clear? Next, chapter number 2, charge. With respect to the services, I want you to pause in the question and go for a structured thinking. That step number 1, analyze the exemption. Step number 2, you go for the RCM FCM analysis. Because if the supply is exempt, there is no question of reverse charge mechanism or forward charge mechanism. I hope this is clear. Sir, you are not telling this for goods, because goods exemption is not a part of our course. That's why I'm asking you to do it for services. Recovery agent service, a lot of times I see students putting this under reverse charge mechanism without seeing who is the recipient. If the recipient is, let's say, trader, not a bank or a financial institution, then in that case, this is going to go under the forward charge mechanism. Silk can manufacture, this is one entry I'm discussing. Silk can manufacturer, if he is supplying the silk yarn made from raw material, silk cocoons, so raw, basically the silk from the raw silk, and he is supplying it to a registered person, then in that case, RCM is going to apply. Now, question will try to confuse you. Question will say the manufacturer is a registered person, or a manufacturer is a company. I don't care. Doesn't matter. We have used the word in the RCM entry as manufacturer to the recipient. Now this manufacturer may be a company, I don't care. He may be a registered person, I don't care. This is going to go under the reverse charge mechanism. Just a point to be noted with respect to the priority sector lender certificates, the 3-point analysis for the nature of GST, it is always going to be the goods. It is always in the nature of IGST, regardless of location of supplier and place of supply, and always reverse charge mechanism is going to apply. Security services under reverse charge mechanism, again one of the entries where I have seen students commit a lot of mistake. Security services reverse charge mechanism is going to apply when it is a case of other than body corporate supplying the service, that is providing the security personnel to a registered person, except composition or registered solely for the purpose of TDS and not making any taxable supply. Now ICI will, what it will do, it will say that the security services are availed from, let's say, A Limited, but it is unregistered. So step by step analysis we will do. First of all, the supplier is it other than body corporate? No sir, it is a body corporate, means a company or LLP. So it is a body corporate. The reverse charge mechanism is not going to apply. This will go under forward charge mechanism. But will actual GST be involved? Answer is no, because it is unregistered. Unregistered means the company is not having more than 20 lakh turnover. So the company is not registered, it is not going to charge the GST. No ITC analysis for me. In my table of ITC, don't take any value. This is one of the very important adjustment ICI asks. Okay, next. Goods transport operator is not a goods transport agency, okay, for RCM analysis. Regardless of what rate of GST is applicable on the GTA services, under forward charge mechanism, it can be 5% or 18%, 5% without ITC, 18% with ITC, or reverse charge mechanism, it is 5%. Regardless of that, I am eligible for ITC. So basically, forward charge whatever rate may apply, RCM whatever rate may apply, I am going to check the ITC provided it is used for taxable purposes. Okay, pay attention on who is liable to pay the GTF rate. Not only in the GTA, this is a general point, that always check the definition, always analyze the definition of recipient. Recipient, section 2 clause 93 is the person who is liable to pay the freight, liable to pay the consideration. This can help you even in the place of supply analysis, that you are able to identify the recipient correctly. So that is the recipient, and entire analysis will happen from who is the recipient. Now one entry, for example, I paid a freight of GTA for inward transportation of goods which are exempt from GST. So whenever there is any inward supply, in question, whenever there is any inward supply, please analyze the two aspects correctly. Aspect number one is the reverse charge mechanism. Aspect number two is the ITC. So here, if it is from a GTA, you are going to pay the tax under reverse charge mechanism, but you will not take the ITC. Why? Because it is exclusively incurred for items which are exempt. So you should not be confused in the paper that, sir, if I'm not getting ITC, should I pay under RCM? Absolutely yes. Okay. If GTA service recipient is a department, establishment, local authority taken registration only for the TDS, this is exempt from GST. I have seen in the notes, sometimes it is not given in an interlinked manner. So in the notes of the GTA, you might find that RCM is not applicable when recipient are these people. But before RCM FCM analysis, there is entry number 21B in the exemption chapter that exempts this. So if it is exempt, there is no question of RCM FCM, right? Metal scrap short summary: unregistered supplier to registered recipient, it is going to go under reverse charge mechanism, no TDS. Unregistered to unregistered, both are small people, no TDS, no GST. Registered to registered, both are big people, forward charge mechanism, TDS also is there. And registered to unregistered, supplier is a big enough guy, so forward charge mechanism, but no TDS. Is it clear? So TDS only and only section 51 when both are registered. Next, property on rent. I hope you have revised the property on rent, because those are short videos. The dubbing is available. If possible, please see that. Services by government and property on rent, very, very important. I want you to see that. Okay. So property on rent, please understand there is no exemption for commercial property. Commercial dwelling, no exemption whatsoever. If the commercial property is given on rent by unregistered person to a composition registered person. So there is a RCM entry with respect to the commercial property, that unregistered to registered, but except composition. So except composition means RCM will not apply, FCM will apply, but ultimately there will be no GST because the supplier is unregistered. Okay? So sometimes people ask that, sir, we saw in other books it is written FCM, you are writing no GST. I have written the result, the consequence. Okay, you write FCM, but ultimately no GST. That is the point you need to remember. Okay, next. A residential flat, for example, is given on rent to a company IFCI Limited, which is registered under composition scheme for stay of its employee. Entry number 12. Entry number 12, the renting of the property. What is the exemption analysis? Three conditions. Condition number 1, it should be a residential dwelling. Check. Condition number 2, it should be for the residential purpose. Check. Employee staying only, he is not conducting any commercial purposes. And condition number 3, it should be unregistered person, except one case where it is a sole proprietor. Is it the applicable case here? No, it is a registered company. Sir, but it is registered under composition. I don't care. I say I will try to confuse you. Please don't get entangled into unnecessary analysis. For residential flat, being registered under composition scheme is absolutely irrelevant. In commercial property, yes, it was relevant, hence I have written except composition scheme. So this is going to be taxed and ultimately under reverse charge mechanism because the recipient is registered. Okay, next. Renting of immobile property by the government. I hope you will see that video. I am stressing it again and again. It's a very important one. So renting of the immobile property by the government, RCM will apply only when the recipient is registered. Not if he's unregistered and then he's liable to get registered. No, already he's registered, then RCM will apply under otherwise forward charge mechanism. But in case of Indian Railway, if you see as a supplier, it is always going to go under the forward charge mechanism. Okay, next, reverse charge mechanism for motor vehicle on hire. Now many people have learned that motor vehicle on rent, it is going to go under reverse charge mechanism. I just have to check the three conditions. Supplier should be other than body corporate, recipient should be body corporate, and I will see maybe the 5% rate. Guys, apart from that, I want you to analyze two more conditions. Condition number 1, please check which is the motor vehicle. It should be for passenger transport, not goods. And second, the most important, cost of fuel should be included. Cost of fuel should be included in the consideration. I hope you are able to remember this. Okay, these two are very important conditions. I say I can play around on these points. Next, author can go. The copyright transfer, RCM is there, but he can go under forward charge mechanism. But if he's going under that, there is a 1-year lock-in period. Similar lock-in period exists at 2 more places. Banks optional method, where basically they take 50% of other than 2 credits. If the ITC is with respect to the block credit, no ITC. If it is for non-business, no ITC. But other than that, business exempt, whatever it may be, 50% they can take. If they avail that, remaining part of the financial year, they cannot opt out. They have to apply that same method. Similarly, Rule 32(2)(b), where we basically talk about the currency exchange slab based valuation. If you remember, 250 end limit 60,000. There also, if they apply for this particular method, the remaining year it has to remain the same. These are the lock-in periods. Small things can get tested in the MCQ. With respect to the rural area, in insurance industry, BCBF is exempt, but intermediary is not exempt. Agent intermediary exemption in rural area is only for a banking company. Okay, so if there is, let's say, an agent who is providing service to a business correspondent, or an agent providing service to a business facilitator, and this is with respect to, let's say, rural industry. If it is with respect to rural industry under insurance sector, it is going to be taxable. And who is going to pay the tax? Let's analyze. Agent to business correspondent, this will go under reverse charge mechanism, but this will go under forward charge mechanism, because in RCM entry we only have one out of two. The one is agent to BC. Agent to BF is not there. I hope this is clear. And another RCM entry is business facilitator to a bank. Business facilitator to a bank. Business facilitator to insurance, it is again under forward charge mechanism. Is this clear? Next, composition scheme. Just a point to be noted, if a person is already registered under 10(2)(a), that is with respect to the services 3 plus 3%, he can later on start the supply of goods. This is a little typical assumption, because in the question ICI had asked the question of Deepti services, if you remember. So basically what analysis happens is that if I want to apply under 10(2)(a), one of the conditions is that I should not be eligible under 10(1). But here that is not the case which is happening. I have already registered under 10(2)(a). Later on I'm starting the supply of goods. I'm allowed to stay under 10(2)(a). Next, interest discount income in composition, you have to exclude from everywhere. You don't have to pay the composition levy on it. You don't have to check in the limit of 1.5 CR. Also, second proviso to 10(1). Marginal services limit, second proviso to 10(1), there also interest discount you will not be taking, where we apply the 10% limit or 5 lakh, whichever is higher. Okay, next, composition levy, traders are going to pay 1%, that is 0.5 plus 0.5 of taxable supplies in the state. Manufacturer 1% of turnover in the state. Restaurant 2.5 plus 2.5 of the turnover in the state. 10(2)(a) services 3 plus 3% of the turnover in the state. Some marginal services are allowed as per limit, but composition levy has to be paid for it. So in the marginal services, if they are in the question, I want you to go for a structured thinking. Step number 1, check whether the limit is breached or not. If limit is okay, then don't forget to pay composition levy on it. So okay, your marginal services allowed, but you have to pay the composition levy. So if I'm a trader and providing services along with it, all the services I'm going to pay 0.5 plus 0.5. Okay, next. There are some notified goods that you remember: ice cream, tobacco, aerated drinks. Their composition levy for manufacturer is not allowed, but trading is allowed. Okay, ICI can play here. Filing of statements with respect to the ITC. If I'm going under composition scheme, first of all, let's quickly revise the start of the composition scheme. If I'm taking new registration and I'm applying for the composition scheme, my scheme will be effective from day 1. But if I'm already registered person and I'm filing CMP02, that is an intimation to opt for the composition scheme. So let's say I file it on 26th of March 2026. My scheme is going to be effective from 1st of April 2026. By the end of the financial year, you have to file it, and your scheme is going to be active from the 1st of April. And in this case, I have to reverse the ITC, for which ITC 03 filing will happen within 60 days. Another way around, if the scheme lapses, within the lapse date, 30 days. Within 30 days, you have to file the statement of ITC and claim the ITC. Okay, so 30 and 60 days. Some people I have seen that they don't know this limit, so ensure you are knowing this. Couple of attempts back, I think in September 25, they had asked this 30 days. I think May 25, they had asked this 30 days time limit. Okay. Okay, next. Let's see. Place of supply. Place of supply, very, very important. Let's start with the structured thinking first. I want you to have this thinking, because in Jan 26, some people were able to crack the question correctly, which you must have seen. Jan 26 place of supply, there was a very tricky adjustment of renting of yacht. Okay, so I will discuss that. I will tell you the entry as well. So first, understand you have to do the structured thinking. Step number 1, check whether we are talking about goods or services. If goods, apply section 10 or section number 11. If services, apply section number 12 or section number 13. Now these are of IGST. Okay, place of supply is from the act of IGST. Now, what was that entry, sir? Entry they had given that there was a person in India. His location was in India. He had taken a yacht on rent in, I think, Australia for 10 days. So all these points, it excites, it creates a feeling of excitement that, sir, we are able to remember section number 13.8, that renting of yacht, renting of motor vehicle, including yacht, apart from aircraft, apart from vessel, up to a period of 1 month. But at the end, they wrote from means you are renting it from a party which was in Delhi. So structured thinking, it is a case of service and location of both was in India. So you had to apply section number 12. This will ultimately go under section 12 too. But since it is a case of yacht vessel, the hiring is blocked under 17.5. But many people applied 13.8 and they lost their marks. Okay. So I hope now you will remember this always. Let's start with the pointers. Section number 10.1b that deals with the bill to ship to model. Historically, like traditionally in the bill to ship to model, there are two supplies. Okay, one is that third party who is supplying, and then it is asking the supplier to deliver it to someone else who had bought it from him. Okay, but in the question, if you find the words that I'm instructing it to supply somewhere else, I'm asking it to be delivered somewhere else, I want you to still apply the bill to ship to model. I'm a registered person, you are a supplier, and it is written that I am asking you to deliver it to another venue. That may not be a separate supply, but I'm asking you to deliver somewhere else. You still apply the bill to ship to model. You still apply section number 10.1b. And for this supply that I'm buying it from you, your answer of the place of supply will be the principal place of business of me. But if I'm not registered, please understand, if I'm not registered, then you're not going to apply bill to ship to model. You are going to apply the delivery address as the place of supply. This was asked in the IBS paper. I hope I'm able to make myself clear. Otherwise, rewind this particular part. And if still there is any query, ask me. Okay. You can reach out on WhatsApp. 2 points to be noted. 10.1CA, that is the unregistered person case that I discussed right now. I discussed 10.1B and 10.1C above. So 10.1C overrides 10.1A and 10.1C. This is not a related to exam point. This sometimes the query comes that, sir, in 10.1C unregistered person buying, there is a movement also happening, so shouldn't we apply 10.1A? No, 10.1CA is going to override 10.1A and 10.1C. In 10.1CA, where basically we say that it is a OTC sale, unregistered person is buying, there we have to check whether the invoice is mentioning the address or not. I don't want your detailed address, your flat number, your gully number, your floor. No, I just need to ensure your state is recorded in the invoice or not. If that is there, that is going to be the answer of place of supply. Otherwise, tir ghuma ke wapas, it will be the location of supplier. Section number 13 subsection 3, I want to discuss this with you. Section 13.3, I find a lot of queries here. Section 13 subsection 3 is performance based service. Performance based service, the place of supply is going to be what? Where the services are actually performed. Where the services are actually performed, that is going to be the answer of place of supply. This can be with respect to the goods, it can be with respect to the individuals. Okay, now what is the meaning of performance based service? Performance based service means I require the goods to perform the service. For example, warehousing. I require the individual or someone on behalf of the individual to provide the service. For example, security service, for example, makeup service. So these are the example of the performance based services. Under this particular goods case, I have two exceptions. Exception means the answer will not be where the services are performed, but rather something else. What is that something else? Let's see. Exception number 1, where the goods are taken on electronic means on a remote. Remote means they are taken without the physical requirement. Okay, so in that case, the answer is not going to be where the services are actually performed, but rather the answer is going to be where the goods are located. Where the goods are located at the time of the performance of service. So if example, there is a person in US, his laptop, an engineer sitting in Bangalore has taken on remote and he has performed some services. So in this particular case, the answer will not be where the services are actually performed, which is actually Bangalore, but where the goods are located, because their actual benefit is going to be derived. So answer will be United States of America. Okay, and the second exception is with respect to goods temporarily being imported into India for repair, treatment or process, for RTP. And the second thing, which is the most important, and if the question is silent about it, I want you to put an assumption about it, that it should not be used after the RTP unless the use which is indispensable for such treatment. So for example, I'm repairing the calculator. I'm going to do 2 plus 2 is equal to 4 or not to check. But other than that, let's say that I ask the recipient, I ask that person from whom I'm importing, I will say to him that let me take one batch by using the calculator and then I will return. In that case, this exception will not apply, and instead the answer of services actually performed will apply. But if this is an exception, then in that case you are going to apply 13.2, that is the default provision. Location of recipient becomes the answer, otherwise location of supplier if the recipient's address is not available in the ordinary course of business. Okay, so with respect to this 13.3, I have given you the complete analysis yet again. If there is nothing given with respect to the use, I want you to take an assumption and explicitly state it. Okay. When location of supplier or recipient is outside India, section number 13. Technically, I have seen some people write supplier is outside India. No, location of supplier or location of recipient is outside India, you apply section number 13. And then the counter query comes in the class that what if sir location of supplier and the location of recipient is outside India? My dear friends, it is exempt. It is exempt in IGST chapter number 4 that if both of them is outside India, both of the locations are outside India, it is exempt. Okay. So just a point to be noted with respect to 13.8. Hiring of aircraft and vessel for any period, it falls under 13.2. Others including yacht up to 1 month, up to the period of 1 month, 13.8. Otherwise more than 1 month, you will apply 13.2. Okay. And another point to be noted in 13.8, basically there are 3 services. Apart from this, there is a intermediary service and there is a service by the banking and financial institutions that should happen to the account holders. Then 13.8 will apply, otherwise 13.2 will apply. Section number 14 and section number 14A, that is OIDAR, section number 14. And 14A is online money gaming. I want to give you a small analysis. Please pay attention. Basically, both of them apply when the supplier is outside India. If supplier is in India, you apply the normal law. First, I will talk about section number 14 that deals with OIDAR. Okay, here structured thinking is important. Certain small pointers are important. OIDAR, what is the meaning of OIDAR? OIDAR means the services which are given through IT. Electronic means IT, and impossible in the absence of IT. For example, online gaming. For example, online advertisement. For example, OTT platforms. I hope this is clear. Ebooks. Okay. Now, just another thing you have to make a note of. Online money gaming is not OIDAR. Online gaming is OIDAR. Okay. So, if OIDAR, the supplier is from non-taxable territory, and if the recipient is registered, here RCM is going to apply, and it will be an import of service. RCM is going to apply. No section number 40. Section 14 here is not applicable. If recipient is unregistered recipient taking specifically OIDAR service is termed as NTOR. Here reverse charge mechanism will not apply. Here section number 14 applies. Forward charge mechanism applies. Supplier has to take mandatory registration under section 24, single registration, simplified registration scheme. Is this clear? This is what we cover in section 14. But when I compare this with section 14A that deals with the online money gaming, it deals with the online money gaming. Here the recipient may be registered or he may be unregistered. We don't care. If supplier is outside India providing online money gaming, which is technically a goods because it is an actionable claim, so their forward charge mechanism is going to apply. If you link this, if you try to open the book and link this with section number 24 mandatory registration, in case of OIDAR, you will see the word unregistered person, because if it is a registered recipient, the import RCM will cover that. You don't need to take mandatory registration. But in the next clause, if you see online money gaming, you will just find the word recipient because it may be registered, unregistered, we don't care. Supplier has to comply with the forward charge mechanism. I hope you're able to remember this. This is the basically linking that I have given. Okay, next chapter number 4, exemption. Meaning of the charitable activities that we see in entry number 1. Educational program skill development. If it is for persons in rural area, that should be more than 65 years of age. But another entry with respect to the charitable and government is old age home run. So in those old age homes which are run by them, there the age is at least 60 years. Okay, technically, just I want you to remember the age related thing. And here the consideration should not cross 25,000 per month per member. Okay, so if it's a very hi-fi luxury kind of old age home run, then GST is going to apply. Renting of the precincts. Now in one of the charitable entries, we have this renting part. There almost everyone just learns the entry amount, the rent amount. Now beyond that, I want you to learn the supplementary condition also, that what are you renting? You should be renting the precincts of religious place meant for general public, not for private use. Maybe ICAI will play on this condition, and it should be owned or managed by the charitable institution that is registered under 12AA or AB. Exemption applies if the amounts are up to 999 or 9,999, depending it is a community hall or it is a shop or it is a room rent per day. So 10,000 or 1,000 touch exemption gone. Okay, training, coaching in recreational activities for arts and culture is exempt only and only when provided by the individual. But if we talk about sports, in case of sports, individual is not covered. We need to focus upon registered charitable entity in that particular part. Paper supplied to an educational institution is a supply of goods. Goods is not a part of our services exemption entry. So unless given otherwise, you are going to tax it. I hope this is clear. Security, cleaning, housekeeping, it is exempt only when provided to school, in school. In other cases, catering, it may be outside school, I don't care. But security, cleaning, housekeeping, to school, in school. There is one entry which becomes a query area in the class. Bus fees collected from students by a college. I say this is exempt. Then people ask, students will ask, sir, but this is exempt only for school. Guys, this is not an inward supply for school. This is an outward supply. This is an outward supply. You're collecting the bus fees from students. So this is an outward supply by an educational institution. One of the educational institutions is the college also, where the curriculum is recognized by the Indian law. So this is an outward supply. An outward supply to student, faculty and staff is exempt regardless of what the supply is. It can be any service whatsoever. It is going to be exempt. Okay. Just certain other points to be noted. Healthcare can be at home as well. Air ambulance is also exempt. Reiki is not a system, recognized system of medical care, but other than that, your basically the homeopathy, allopathy, Siddha, Unani, all those are recognized systems of medical care. And with respect to that, the diagnosis, treatment and care is exempt under GST. With respect to the ERCC GST exemption, I want you to remember this, that ERCC GST exemption will be only up to the level of GST which is paid by the mining leaseholder. If anything is more than that, you have to pay it under the reverse charge mechanism and claim the ITC. One question I'm discussing which was asked in November 19, that a person was assigned the right to collect the royalty on behalf of the Maharashtra government as ERCC. He has noticed that the mining leaseholders have short paid 2 lakh as IGST from what he had been exempted. It means his is, let's say, 6 lakh, then the mining leaseholder would be 4 lakh. So up to 4 lakh exempt, balance 2 lakh, that particular person for whom we will be calculating, you have to put it under the reverse charge mechanism because this is a service by Maharashtra government, and you have to take the ITC because it is an inward supply for you. Okay, next, construction services are exempt only with respect to the pure labor and only for the residential single units. That too, if it is the Pradhan Mantri Awas Yojana, housing for all mission, you will get it for the benefit of the renovation and alteration as well. But if it is other than government, only for the original works, commercial it should not be involved. Residential complex are also not covered. Okay, and only pure labor is covered. This is done. This is done. Non-AC contract carriage, non-AC stage carriage, if they happen via ECU 95, so there it is going to be taxable regardless that it is non-AC or whatever it may be. RCS airport exemption, you remember, Udan scheme, regional connectivity scheme, where viability gap funding is paid by, let's say, Indigo is receiving this viability gap funding by central government. So that is exempt, but that exemption will apply for 3 years from the commencement of operations at an RCS airport. What happens in Jan 26, we have seen that people have learned the main part, but supplementary parts are left out. I'm trying to cover that basically. In the goods specific exemption entry number 2021, where random goods we cover, relief material we cover, agriculture produce, milk and all those points, agriculture produce, registered newspaper. So those points we covered. Exemption with respect to the transport of these items. So that is exempt when provided by railway or a vessel, okay, or a GTA, but air, it is going to be taxable. Air is not exempt. Okay, next, entry number 34 benefit, where the services are given by acquiring bank to a seller with respect to the settlement up to rupees 2000, that is applicable to a payment aggregator but not a payment gateway. What is the difference between that? Payment gateway is only providing the online infrastructure, but payment aggregator is actually providing the function of settlement. He holds the payment and then releases. Okay, micro life insurance product, one of the exemption means the maximum cover is rupees 2 lakh. Although this doesn't remain it doesn't hold a lot of relevance today, because obviously now individual and his family insurance is exempt. Okay, life and health insurance is exempt. And just a point to be noted, when I say family, the family means as defined in the insurance contract for this particular entry. Okay, next, one entry, supply of railway equipment by way of transport by vessel from one place in India to another. This is taxable. This is not exempt. We have no exemption entry for that. Somehow it feels that railway equipment, okay, vessel, no transportation. Okay, is it clear? transportation of goods, inland waterways is exempt, but in general vessel, no. I hope this is clear. Okay. Inland waterways, they will be mentioning that. Now, this is a very important entry where I have covered the recent clarifications and adjustments. Entry number 3 and entry number 3A, that is basically the pure labor and composite, where the goods value does not exceed 25% of the total. These are exempt when only and only provided to CG, SG, UTLA, not governmental authority, not governmental entity. Horticulture and horticulture works to CPWD. Please apply entry number 3 and 3A. You have to learn it. Entry number 3B, that is water supply, public health, solid waste management, sanitation services. Those are exempt only when provided to a governmental authority. And two another points, RERA is defined as, is clarified to be a governmental authority, so its collections are exempt, because we have entry number 4 and entry number 5 where basically the services by governmental authority are exempt. And DMFTs, that is the District Mineral Foundation Trust, when they are established by state government, they are governmental authority. They are also going to be enjoying the exemptions with respect to any collections, or maybe tomorrow they link this governmental authority clarification to entry number 3B. I hope this is clear. Let's move. If a means of transportation of passenger is given on hire to a GTA, that is going to be taxable. But if it is a goods, then it is going to be exempt. Another, with respect to the renting of the motor vehicle, basically there were 4 clauses: A, AA, B, and C. B I have covered. A is basically when motor vehicle for more than 12 passenger, you are renting it out to a state transport undertaking. AA, same, but it needs to be an electronically operated vehicle where you are renting out to a local authority. B we have covered. And C, you are renting a means of transportation of passenger to a person who is providing the service of transportation of student, faculty, staff to a school. So if he's providing to a school, this is exempt, your rent will also be exempt. He's providing to a college, this is going to be taxable. Clear? Next, service by a foreign diplomatic mission is exempt. Service to foreign diplomatic mission, taxable. Service by way of storage, warehousing of raw vegetable fiber such as cotton, flax, jute, it may somehow come to be as a agriculture produce in your mind. No, you have to tax it. Fiber, you have to tax it. Okay. Next, time of supply. I just want you to do September 25 question, Murthy and Sons Limited question, very properly, just to understand the meaning of section number 13.3. Reverse charge mechanism. If there is the RCM applying 13.3, the reverse charge mechanism of services, there there was an amendment with respect to the self invoicing. So if let's say the recipient is not issuing the self invoicing, so you cannot determine the time of supply in one of the clauses. There the residual clause applies, where we talk about the residual clause, that is the date of entry in the books of recipient. So please do that question properly. Okay. Next, chapter number 6, valuation. Just a point to be noted. Please check whether there is a need to go to the valuation rules or not. Step number 1, you are going to be applying section number 15. Section number 15 starts with the 2 conditions, that if the supplier and recipient are related to each other, not related to each other. Supplier and recipient should not be related to each other, and second, price should be the sole consideration. If that is happening, then you don't need to go to any valuation rules unless it is a notified supply. Okay, so primarily your transaction value will be accepted as the assessable value. I hope this is clear. Coming to the next part, municipal levy, mandi tax, excise duty, they are a part of the valuation. You are going to be charging GST on that, but they are going to be excluded from the turnover definition in ISD calculations, as well as rule number 42, apportionment calculations. Rule number 28, that you apply for distinct persons or related persons. Invoice value is going to be deemed accepted as OMV only when the recipient is eligible to take the ITC. I want to give you a quick revision of rule number 28. Come. Rule number 28, quick revision. Step number 1, open market value. Here only your invoice value can be accepted as the deemed open market value if it is eligible for ITC. So for example, if they are buying it for sample distribution or a CSR responsibility, ITC is blocked, invoice value will not be accepted as the deemed open market value. If this is not available, go to step number 2, like, kind and quality. If it is not available, go to rule number 30 or 31. Apart from this is your one particular option. Okay, in this particular option case, if you have an answer at step number 1, don't apply step number 2 and 3. If you get an answer at step number 2, that is OMV is not available or this is not available, then you don't apply step number 3. You have the answer at step number 2. So here you have to go by the sequence. But apart from this, I have an option. If it is a case of goods and the goods are sold as such, I can pick the further supply of like kind and quality of such goods sold to unrelated customer, and I can take 90% of that, and that price and this particular price whatever is picked, I can compare and take the lower one, because the question will ask me to go for the beneficial one. Now this whatever I've discussed, you will be able to catch, understand, absorb only if you have done the questions properly. Otherwise it will go above your head. Okay, just a point to be noted, another, that this particular option deemed open market value you have for goods and services both. Transfer to a distinct person, this I have discussed. Option of 90% I have discussed. And sometimes the question will say that the recipient is going to process the goods. Process the goods means it is not going to be sold as such. So you don't have that other option. That other option is basically first proviso to Rule 28 sub Rule 1. 28.2 is the corporate guarantee, which applies when the recipient is in India, where the valuation is 1% per annum of the guarantee amount or actual consideration, whichever is higher. But again, if the recipient is eligible for full ITC, your invoice value will be accepted as the deemed open market value. Okay, I hope you will remember this, per annum. So if it is for 4 years, directly you will multiply by 4. If it is for 3 months, you will multiply by 3 by 12. If it is for 1 year but renewed every year for next 6 years, then every year 1%, 1%, 1% it will be taken. Okay, next, subsidies mini summary. Only one type of subsidy is going to be a part of the valuation, received from non-government and price linked. So if it is from government, it will never be a part of value. If it is from non-government but it is price linked, so yes, it will be a part of value. Non-government, blanket subsidy or a general subsidy. General subsidy means they are not concerned with my unit sales. They are saying that for the entire year at the end you will get 5 lakh rupees subsidy. Okay, but let's say they are saying that okay, for every class that you are selling to the student, we will give you 1000 rupees subsidy. So that is price linked subsidy, right? So if it is the general subsidy, blanket subsidy, regardless it is received from government or non-government, never ever it will be a part of my valuation of supply. Next, agent valuation, just a point to be noted. Sole agent you are going to apply rule number 28 only, but normal agent you are going to apply rule number 29, where in the step number 1 itself you have an option of open market value or further supply of like kind and quality to unrelated customer, and you have to take 90% of that. There the question will generally clearly state that pick the beneficial one, so you pick the lower one. Okay, next, chapter number 7 ITC. 1 minute. I hope you are enjoying that. Okay, all the points that we have covered till chapter number 6, I hope you are enjoying it. Next, let's start. If I'm getting an invoice from a vendor from where I'm taking some inward supply, if it does not have a invoice reference number, despite the fact that it has to go under the invoicing, that is its turnover in any of the years has gone more than 5 CR, then that is not a valid document for me. That is not a correct invoice for me, and without a valid document I cannot take ITC, so no ITC for me. Rule number 37 that basically says I have to pay the invoice value within 180 days of the issue of invoice. That is not applicable in 3 cases. First, reverse charge mechanism. Second, 15(2)(b, supplier's obligation paid by recipient. And third, deemed supply schedule number 1. Basically here there is no consideration itself. So here it is possible that the question states to an adjustment that 180 days have crossed, but this was under reverse charge mechanism. So here you have to make no treatment whatsoever. If you miss this particular point, you are going to reverse the ITC or you are going to add it in the output tax liability. So that will be a mistake for you. In the X-Works contract, there was a recent circular with respect to the automobile industry, which basically says that here my supplier is there. In the automobile industry, here it is an original equipment manufacturer, and the X factory contract is there, or we can say X-Works contract is there, which basically says that here there will be a transporter and the goods will be handed over to the transporter at the factory gate. Let's say this is happening on 27th of April and the goods are reaching at my premises. I am the dealer of that particular automobile, and here it is being received on, let's say, 4th of May. In this particular case, the question comes that when it will be deemed that I am receiving the goods, 4th May or 27th April, because your month is changing for ITC. So here it was clarified that assume the goods are received on 27th of April itself, because the liability, the property transfers on 27th April, the transporter liability is also on me. If there is some problem in the transport, I have to file the claim. So I can assume that 27th April I'm going to be receiving the goods. Okay, so if this is the period of April that we are testing in the question, you take the ITC. Rule number 37A that basically says that supplier, if he doesn't file the 3B by 30th of the September following the financial year, which financial year? When I am taking the ITC, not of when the invoice is issued. So invoice may be issued in 23, 24. I have the time limit to take the ITC 30th November or annual return, whichever is earlier. So I take it in, let's say 24, 25. And after that, in next year, 30th September, you will see this particular period for checking the supplier's 3B filing is done or not. I hope I'm able to make myself clear. Let's say the invoice was issued on 27th of April 2024. So this is 23, 24. I didn't take the ITC in April. Instead, I took it in, let's say, May 2025. So I took it in 25, 26. Now this period of the 3B filing that we have to check, that the supplier has to file the 3B by 30th September of which financial year, succeeding the financial year of my availment of ITC. So I will see this in 26, 27, that is 30th September 26. And if till this particular point the 3B is not filed, then by 30th of November, I as a recipient have to reverse the ITC. Otherwise, it will be claimed with interest. Okay, next. Section number 16, subsection 6, you remember that if the registration is cancelled, okay, and later on the registration cancellation is revoked, then I am eligible to claim the ITC with respect to this period. Whatever I could claim, but I could claim by the law, but because my portal was suspended, I could not claim. So when this registration cancellation is revoked and I'm back into the GST game, I will get at least 30 days to claim the ITC. I hope you remember this, right? Section number 16, subsection 6. The main point you have to check in the question where maybe MCQ or something I say can place that when the cancellation order was passed. I'm not talking about the effect of cancellation. I'm saying the cancellation order was passed on that date. Your 16/4 should not have been already expired. Let's say the cancellation order is coming in December month. So already your 30th November has gone. So you cannot claim that I could not avail the ITC because my registration was cancelled. Your registration cancelled on that day, 16/4 is already expired. So not going to get the benefit of 16/6. Basically in 16/6, when the registration cancellation is revoked, you get 30 days or 16/4 time limit, whichever is later, right? Next. Take care of the following inclusions in the exempt supply for rule number 42, apportionment. Just a point to be noted, that question is not going to state a separate point that, my dear student, please apply the adjustment, please apply the apportionment. If there is any exempt supply in the question and there is some common credit, you have to apply inherently in that particular question. Now exempt supply means whatever exempt supply as per section 2 clause 47 plus outward RCM plus securities 1% of sale value plus land building circle rate on which the stamp duty is paid, and the warehouse goods, if they are sold, you have to take the value of the duty free shops that the question will be giving. And interest income and duty credit scrip, you have to exclude. Interest income exclude from E only for a non-banking company. Banking company you have to include unless an optional method is given. Now, a silly mistake possible. When I say that you have to include these particular items in the exempt supply, means they are going to be in the E also and denominator F also. But when I say that you have to exclude the interest income, so this will not be a part of E, but it will very well be a part of F. That is the denominator, because I am saying you don't consider them as exempt, but they are still a turnover. So you are going to be including them as a part of denominator, otherwise your calculations will mess up. Rule number 43, special situation where you are changing the use of capital asset from exclusive non-available to available. You remember one term, TIE, ineligible credit, because this can be asked in your MCQ directly. This is basically the ITC which pertains to the period when it was exclusively used for non-available purposes, and this is 5% per quarter use. You have to add it to the output liability. I hope this is clear. Advance of goods, the time of supply, you know, I don't pay GST on the advance of the goods, but in the rule 42 calculations, it will be a part of F, that is the turnover. Time of supply is being deferred, but it is still a supply. So you are going to take this as a part of your F, that is your basically denominator. Optional method for the banks I have already discussed, 50% point. Just a point to be noted for motor vehicle. This is not a motor vehicle under block credit. Fixed rail that is going to run. So railway coaches basically. Special purpose vehicle in factory. So these are small motor vehicle kind of things, but they are not for general use of people. They are in factory for maybe transporting the goods. And less than 4-wheel engine capacity up to 25 cc. So these are not motor vehicle. You will get the ITC. 17.5C, 17.5D works contract and self-construction. Both are same things basically. 17.5C you are taking from someone else, whole and sole contract of goods plus services. 17.5D you are doing self-construction by taking goods services separately. Three cases, in both the cases it is common that three cases ITC is going to be allowed. Case number one, subcontracting. So basically one person is taking this particular services and giving to someone else. For him the ITC will be allowed. P&L expense not capitalized means it is technically not a construction. I hope you are able to remember that because this is revision which is happening. And third, eligible plant and machinery plus its foundation. In plant and machinery, 3-4 things are never included: land, building, civil structure, pipeline outside the factory, and telecom tower. Telecom tower, there are a lot of queries that, sir, there is a judgment, Indus Tower, Vodafone, we have seen one judgment of Supreme Court. Guys, for our IDT subject, we don't have any statutory update. So in my opinion, it should not impact our study unless ICI gives it. ICI has not given it in the material. If pipeline is inside the factory, very well ITC is going to be allowed. With respect to section number 18, special credit. In 18.1, where existing ITC is being claimed, capital goods is available only in two cases. Okay, 18.1C and 18.1D. 18.1C is when your scheme is from composition to regular, and 18.1D when your supply is from exempt to taxable. In otherwise 18.1A and 18.1B, that is liability to register and you apply within 30 days, or voluntary registration, only inputs ITC is going to be allowed. But 18.1C, 18.1D, inputs plus capital goods, input services nowhere available. So there is one question I want to test. If there is a person, his supply is 60 lakh, his aggregate turnover is 60 lakh, but everything is exempt. Okay, the entire supply is exempt. Tomorrow this exemption is withdrawn and hence it becomes taxable. So are we going to apply section number 18.1A or section number 18.1D? Answer is 18.1A. We are going to be applying 18.1A. Why? Because 18.1D and 18.1C is for those people who are already registered. If you don't know this point, just open the notes, whatever book you have referred, and you will find the word registered in 18.1C, 18.1D. So in this case, what difference they can make? In ICI can ask from the point of view of claiming the ITC of some plant and machinery. So in this case, I won't be able to claim plant and machinery existing ITC because 18.1A does not allow the ITC of existing capital goods. Maybe ICI will frame another question below that what if the company was already registered? Then in that case, you can get 18.1D and you will be taking the ITC subject to the deduction of 5% per quarter of that particular capital item. And also 1 year time limit applies. Within 1 year, this time period should come. If it is more than 1 year from the issue of invoice, no ITC for anything in 18.1A, B, C, D. Scrap sale of molds, dies, jigs and fixtures, that is 18.6. If these are sold as scrap, see 18.6 in general, you are going to compare ITC minus 5% per quarter or sale of transaction or GST on the transaction value, whichever is higher. But in this particular case where you are selling them as a scrap sale, you don't have to compare the two. You have to take the tax on transaction value because transaction value is going to be very lower. Next, 18.3, transfer of business, constitution change. There are a couple of points to be noted. Let's see. Change in the constitution of registered person, the ITC transfer is allowed provided there is a specific provision for transfer of liabilities as well. And this needs to be certified in the certificate of the chartered accountant or the cost accountant that you have to submit with ITC 02. ITC 02, no time limit. Okay, ITC 02, there is no time limit, right? This can be tested in your IBS as well. What will be the individual heads transfer? For example, you know, in case of demerger or in case of partial assets transfer, I have to take the assets value. But let's say my assets value transfer is coming out to be 30%. So 10 lakh ITC is there, my total, and 30% I'm transferring the assets. So 3 lakh also I will be transferring. But 3 lakh from what? CGST, SGST, IGST, I'm at the liberty to decide. Golden line, which will take care of two things, that ratio of assets value, which date you have to pick, and you have to take that and apply to the ITC balance of which date. So appointed date of demerger is when you have to take the value of assets for the ratio and you have to multiply it with the ITC balance, which is on the date of filing of ITC 02, because on that date the portal effect will happen. Assets ratio computation, just a point, another very, very crucial point to be checked upon. Assets, when I say, I don't care it is a current asset or a non-current asset. I don't care whether on this asset I have claimed the ITC or not. It can be a motor vehicle also. I just have to see what assets are being transferred because I want to focus upon how much transfer is happening. Accordingly, that ratio I will be applying on the ITC. Just a small summary, capital goods reversal, it comes a question that some points there is a 5% per quarter reversal, some parts there is a pro rata reversal. So in this particular case, can you summarize where 5% is there and where pro rata is there? So see, section number 18.1 existing ITC, you go by the 5% per quarter. 18.4 switch to composition or the supply becomes exempt, you have to reverse the ITC, pro rata reversal happens. 29.5 cancellation, again pro rata reversal happens, and supply of capital goods. Although legally both methods are allowed, but in paper you do 5% per quarter reduction because that's how ICA has dealt with it in the past. Okay, next ISD. If there is an ineligible ITC, still ISD has to distribute that. If it is mentioned that recipient is unregistered or making exempt supply, does not matter, you still distribute that. Okay, same one distribution is going to happen if inadvertently some item is left out, you will not be able to distribute it later. And in the question sometimes ICA very playfully gives the word inputs. Please don't put this under ISD distribution because it is not input service, and ISD with respect to input services we have. Okay, clear? Now let's move to the registration chapter. Okay, next chapter number 8, registration. Let's see. Now whenever there is any question which is testing the basically the aggregate turnover calculation, and then it is asking in what states the registration will be required, maybe 2-3 states will be given in the question, and different kinds of supply, taxable, non-taxable, all those kind of things. Now there I have seen that there is generally a problem, basically some friction faced in how we start the answer, how the legal provisions will be stated, because we have different turnover limits. We have for MMNT, we have 10 lakh, we have 40 lakh, we have 20 lakh. So this is one structured answer, how you can start this particular question as per different states. This will help you not only to make the examiner understand how you know the answer, but also to analyze the question in which is basically asked. Okay, so let's see. Point number 1, we will state the turnover limits with respect to the goods if I am selling it intra-exclusive. So goods intra-exclusive, there are 3 thresholds available: 10 lakh, 20 lakh and 40 lakh. 10 lakh is for MMNT states, that is basically Manipur, Mizoram, Nagaland and Tripura. 20 lakh it is for PT Musa, that is basically Puducherry, Telangana. You have Meghalaya, Uttarakhand, Sikkim and Arunachal Pradesh. And balance all the states including Jammu, Assam, Himachal, we have 40 lakh limit. Just a point to be noted, if I am making intrastate exclusive goods, along with that I am making the sale of the advancement, I'm making the supply of advancement of loan against which I'm earning interest income. So that is also considered to be exclusive goods only. Technically this is a service, but it will still be considered to be exclusive goods. Okay, now I hope this is clear. Sir, why did you write these 3 states specifically? Because if you see these 3 states, it might come up as a special category state. But just to reiterate, even if these 3 states are involved, they give us the 40 lakh limit for the purpose of the registration threshold, right? If I'm making the supply of services or goods plus services, but here it is not this particular interest income, other than that, then in that case you have only 2 registration thresholds, that is MMNT and others, 10 lakh versus 20 lakh, no 40 lakh involvement here. Next, this is a small amendment which came couple of years back. Okay, I'm just putting this down because I don't know, maybe ICA will test this. Physical verification of business premises, when it happens, you know, in registration process, physical verification is possible. There is no need of applicant present there. This is a very small minor procedural amendment, but maybe, I don't know, the way ICA asks sometimes, you should be knowing this. Handmade goods, when I use the word handmade, in the case of handmade handicraft goods, where we see section 23, 22, 24, we have that link, right? You get the exemption from mandatory registration, you get the registration threshold. So handmade means it doesn't have to be necessarily 100% handmade. Some minor machinery use is allowed. But if the question states 50-50, 50 handmade and 50% machinery, that is not handmade. So in that case, if I'm making interstate supply of such goods, I will be requiring mandatory registration. I will not get the benefit of registration threshold that I get in handicraft handmade goods, but this will not be considered to be handmade then. Okay, rule 10A, which is basically the relaxation for furnishing of the bank account details, we give you 30 days or GST urban filing, whichever is earlier. So that is not applicable in 3 cases: TDS deductor registration, TCS collector registration and suo motu registration by the PO, basically where he catches you that you are liable for registration but you didn't get. Next, chapter number 9, tax invoice, debit note and credit note. SEZ units are exempt from invoicing. You don't know the concept of invoicing, right? It is applicable when your aggregate turnover exceeds 5 CR in any of the previous years, right from the birth of GST. So SEZ units are exempt from the invoicing, but SEZ developers are not exempt. This is a minor point, can create some mistake in the paper. SEZ units turnover shall be taken in the aggregate turnover to check whether invoicing is applicable or not, but it will itself never comply with the invoicing. For example, there is a company which has two units A and B. A is in, let's say, domestic tariff area and B is in, let's say, SEZ. So it is an SEZ unit. Turnover is 4 CR and let's say it is 2.6 CR. Total it is crossing 5 CR. So invoicing is applicable, but ultimately this unit B, which is an SEZ unit, it will not comply with the invoicing provision. Only unit A will comply. Supply to UIN holders, is it a B2C or B2B? Because if you consider it as B2B, we will apply the concept of invoicing. If we consider it to be a B2C, we will apply the concept of the dynamic QR code. So UIN holders are not considered to be registered persons. If you analyze the definition of a registered person, section 2 clause 94. So registered person, it does not include a UIN holder. In that case, you will be considering it as a B2C. You will apply the concept of dynamic QR code, not invoicing. B2C sale in 3 cases: online money gaming, taxable service by or through ECO, and OIDAR. Even if it is a B2C sale and it is less than 50,000 rupees, regardless of that, the tax invoice needs to record the name of the state of the recipient. In general, in the B2C cases, in general law states that if it is more than equal to 50,000, you need to record it. But here it needs to be mentioned. And if you don't do it, then it is a non-compliance, liable to penalty under section 122, subsection 3, clause number E. If you remember 122, subsection 3, clause E, basically subsection 3 is 5 other offenses, right? D is the summon, you do not appear for the summon. E is this, invoice is issued but not as per law, or you do not account for the invoice in the books. Guys, I'm not saying it is an offense of not issuing invoice. You issued the invoice but it is not as per law. It will fall under 122(3)(e), where the penalty is up to 25,000 under CGST, correspondingly same under SGST. If I'm making a B2C service to a person outside India where the place of supply is falling in India, and it is a forex payment which is happening, in that case dynamic QR code does not require, it is not required, it is not mandatory. I will be completely compliant even if I do not give the dynamic QR code. This comes from the analysis of the dynamic QR code points. Just a point to be noted: for export you require invoicing, not dynamic QR code. Invoice QR code, if you scan it, it contains HSN of only the main item, not the all items. So HSN of all items will not be contained in that particular QR code, only of the main item. Main item means the one which is having highest taxable value, not the total value, taxable value. Self-invoicing and payment voucher, I have seen a lot of queries happening in this area. Please pay attention. Self-invoice section number 31(3)(f) applies when the supplier is unregistered and it is a RCM supply. It is a RCM supply to a recipient. So here self-invoicing is going to apply. What is the time limit for self-invoicing? Rule number 47A states that within 30 days, up to 30 days from the receipt of that supply, you have to ensure self-invoice is issued. And this self-invoice also becomes one of the basis for the ITC for the recipient. But when I use the term payment voucher, payment voucher is going to be required for all the RCM supplies. All the RCM supplies, regardless of that supplier may be registered or he may be unregistered, we don't care. But self-invoicing only when the supplier is unregistered. Is it clear? Commercial credit note or a financial credit note is just like a credit note but without any GST impact. So no reduction of the output liability for the supplier, no reduction of any kind of ITC for the recipient. Coming to next, chapter number 10, records and e-way bill. Accounts of APOB are to be maintained at APOB only. E-way bill is mandatory in 2 cases irrespective of the consignment value. If it is an interstate transfer by principal to job worker, you require e-way bill, it is mandatory. Interstate transfer of handicraft goods, that handicraft handmade goods that we cover in chapter number 8, that if it is an interstate happening, you will get the registration threshold. No mandatory registration provided 2 conditions are complied. Condition number 1, PAN needs to be there. Condition number 2, e-way bill needs to be there. But again, this is only when it is exempt from registration. If it is not exempt from registration, the person has got the registration, then you will see the consignment value. Consignment value, if it is more than 50,000, e-way bill is required. Consignment value includes the GST as well. E-way bill days calculation, I want you to pay attention here because silly mistakes happen. E-way bill generation, basically you have to forget the time. You have to see the date. So if it is happening on, let's say, 12:04 on 14 March, means basically 13 midnight, and after that 4 minutes have passed. Ignore the time, see the date. 14 March, first day will expire on next day midnight. So 15-16 midnight will be the first day expiry. Okay. If it is generated on 23:58 means standard hours, or 11:58 PM on 14 March, again the first day will expire at 12 midnight of 15-16 March. Is it clear? I hope you are able to understand because we see from the midnight to midnight basis. Consignment value more than 50,000, that we know, but If consignment value is more than 50,000 and the goods are transported up to 50 kilometer within the same state, the state is not being crossed, it is intrastate movement, and up to 50 kilometers, maybe from my place to the transporter or transporter to the consignee. So consigner to transporter or transporter to the consignee. In that case, e-way bill is required. Guys, e-way bill is required, but part number B is not required. Part number B deals with the the transport details, the vehicle details. So that you do not require. Part A is still required. Okay, and obviously this is only when the consignment value is more than 50,000. If it is not crossing 50,000, then you do not require e-way bill. Then no discussion of neither part A nor part B. Now, certain points with respect to where e-way bill is not required, exempt. So imitation jewelry and de-oiled cake, e-way bill is required. LPG if you are selling for non-domestic taxable category. So basically if you are selling it for non-taxable exempt category, non-taxable exempt category means basically the domestic category or commercial exempt category. I'm repeating, if I'm selling the LPG for the commercial exempt category or domestic purposes, then in that case e-way bill is not required. But this is non-domestic and not exempt, it is taxable, then e-way bill is going to be required. So this is where the game is on taxable or exempt when I consider non-domestic. Domestic it is exempt. So if it is coming to my home, okay, then in that case LPG no e-way bill is going to be required. Empty cylinders, if you're using for the LPG transportation, e-way bill is not required. But if you're selling the empty cylinders, so supplies of the cylinder itself, e-way bill will be required. Movement caused by defense formation, whether it may be as a consignor or consignee, defense ministry, whether it is sending or it is receiving, confidential matter, national security, e-way bill is not required. But if the consignor is central government, state government or local authority and the transport is happening by rail, so here I'm only focusing on consignor, not consignee. It is sending the goods by own railway network, e-way bill is not required. But in the defense ministry, it can be consignor, consignee and any mode of transportation, e-way bill will not be required, matter of national security. Sometimes a question gets asked that what are the two details which are required to be maintained by regular taxpayer but not a composition taxpayer. I want you to remember this. Stock and tax details are need to be maintained by regular, not a composite supplier. Unique enrollment number, this term is relevant for the warehouse and the transporter people who are not registered under GST. Unique common enrollment number, when I'm using the word this common enrollment number, this is for the transporters who are registered in more than one state. If they want to avoid the use of the GST, instead get this number. This will be for the applicability for the generation of the e-way bill. And once they get this, they cannot use GST thereafter. Sir, you might be wondering why these small points are important. This can be difference between two options in the MCQ. Okay, and there is one term transin. This is for the transporters who are unregistered who want to generate the e-way bill. Transin is for only and only transporters who want to generate the e-way bill. And these three terms need to be clear. Okay, this can be asked in the MCQ as well. Next, chapter number 11, that is payment of tax. Just point to be noted, you know we use the PMT09 for transfer of the amounts, e-cash ledger. So that happens from major to major, minor to minor, major to minor or minor to major. But guys, that is only for the e-cash ledger. It is not for the e-credit ledger. Sometimes the question will state everything correctly using the form PMT09, but it will use in the context of e-credit. No, e-credit ledger you cannot transfer the amounts. E-cash ledger you can do that. Sir, can I transfer the amount from e-cash ledger to another person's e-cash ledger, someone else? Yes, provided is a distinct person. Another condition is that there should be no there should be no pending liability on your side. And third condition, only you can transfer to that person CGST or IGST, not SGST, because state can be different. Okay, so it can be transferred to the distinct person as well, but provided you can transfer CGST balance to IGST or CGST balance of the distinct person, and again provided no unpaid liability in your e-liability register. GSTR 7, that is the TDS return. Just a point to be noted that now it is mandatory, which is termed as a sequential filing. So even if there is no TDS deduction in any month, the TDS return is mandatory. This is not applicable in TCS. Output tax as a result of proceedings. Can I use my ITC? Absolutely yes. Basically, your ITC can be used for any kind of output tax. It can be self-assessed. It can be as a result of the proceedings. I don't care. But other than that, interest, late fee, penalty, whatever is there, you need to pay via e-cash ledger. Section number 50, subsection 1. There is a lot of queries that come here. Please ensure you practice the Seagull question. Seagull question, it is given in my book also if you are referring, or it is given in your, basically the September 25 paper had this. So ensure you are doing this thoroughly. I have covered that 3 cases here. Please pay attention. If I'm filing 3B late, so my GSTR 3B is being filed late and 74A show cause notice is not invoked yet, the demand procedure is not invoked yet. In this case, my interest will be charged on the net cash, net liability paid, means whatever I'm paying via e-cash ledger, not through e-credit ledger. In that e-cash ledger also, apart from the so e-credit ledger we have excluded, in the e-cash ledger also one amount I will be deducting for the purpose of interest calculation, the amount which is lying in e-cash ledger right from the due date of the 3B till the filing of the 3B. So basically that amount was already with the revenue, so I will not be paying interest on that. So this is one case. Second, 3B is filed late but 74A is invoked, show cause notice has already come. So in that case, I will be paying the GST, I will be paying the interest on the gross amount paid. Gross amount paid means it can be either by the ITC or by the e-cash ledger. I am going to pay total on the total amount, but I will still be deducting the balance which is lying in the e-cash ledger from the due date of the 3B till the actual filing of the 3B. Okay, I hope this is clear. This particular part had a lot of views, but if you see the language of the proviso used in Rule 88B, it clearly states that this amount will not be considered for the interest calculation, and logically also it does make sense because I have paid that amount to the revenue already. Then why will I pay interest on that? Okay, so interest on the gross tax paid, that is ITC plus e-cash ledger, but if any amount is lying right from the due date till the actual date of filing which is happening late, yes, that will be deducted. That is my opinion. That is ICA's opinion as well in that September 25 paper. Now, if the 3B is filed in time, but supply was inadvertently missed out and declared later, so on that particular GST portion, which is calculated with respect to the supply which is omitted, you are going to pay the tax on gross amount. There is no deduction happening. Section 50, Rule 88B, all these things apply when the return is filed late. Okay, and with respect to that return, we see how much amount is paid via what source. But here the supply was omitted. You calculate interest on that. Do not deduct anything. Okay, interest will be for what period? Next of the due date of that particular month till the actual filing of the 3B, basically in which you are declaring that. Next, no interest on wrongly availed ITC. Interest is only when the ITC wrongly availed is also utilized. I'm basically talking about section number 50 subsection 3. In section number 50 subsection 3, the interest is not on ITC wrongly availed but wrongly availed and utilized. But now comes the question that how can we say that the ITC which is availed is out of the wrongly availed one? ITC which has been utilized is from the wrongly availed one, because we have one ITC ledger. It contains the wrongly availed also and correctly availed also. And what will be the amount on which the interest will be levied? So in that case, we just have to compare two amounts. If my e-credit ledger balance falls below, the wrongly availed amount, now it has a simple logical interpretation also. I'm not focusing on that right now because we are not conducting class, but yes, please understand this simple formula. If e-credit ledger balance falls below the wrongly availed ITC, in 100% surety we can say that the ITC has been availed from the wrongly, ITC has been utilized from the wrongly availed ITC. And whatever this difference is, let's say my e-credit ledger balance is 1000 and my wrongly availed is 1500. So 500 difference, that will be liable for interest calculation. And the interest will be calculated from the date of utilization till the reversal which is happening. Date of utilization means your due date or actual filing of that return, whichever is earlier, and ICI is going to charge the interest from the next day. ICI is going to charge the interest from next day. I hope you're able to understand this, because unless and until you do a question on this, I will tell you there is a question with respect to Mr. Broker, because right now the focus is not on questions, but if you do that question, you will understand what I'm trying to say. Okay, so that Mr. Broker question, please do that. Basically, if the date of utilization is coming at 20, so from 21st only we are going to be charging the interest, because ICI considers the next day only for the interest calculations. With respect to the TDS, there is a structured thinking that needs to happen. Focus on the contract value of the taxable portion, and that needs to exceed 2,50,000. So the actual payment may be, let's say, 10 rupees, but the contract is of 6 lakh. Then on 10 rupees payment, the TDS is going to happen 2% or 1 plus 1% depending on intra or inter nature. Okay. Up to 2,50,000, no TDS. Contract value exact 2,50,000, no TDS. Exempt portion, no TDS. Okay. Another point. Special case of no TDS, which comes via proviso to section number 51 subsection 1. If the location of supplier and place of supply is in one state and there the recipient is not registered, so in that case TDS does not need to happen. Why? Because for that then the recipient will have to take the registration. Let's say, for example, supplier is in Delhi and place of supply is also in Delhi. So this is an intra-state Delhi transaction. and recipient is, let's say, in Tamil Nadu. Now this recipient will have to take mandatory registration in Delhi for deducting 1% TDS. That will create a problem. So this becomes a case of no TDS, special case, no TDS. But this point, similar point, is not applicable in TCS registration. ECU has to take registration in every state where the supplier is operating for deducting the TCS in the nature of intra 0.25 plus 0.25. Okay, next, chapter number 12, TCS. Passenger transportation, if it is happening by omnibus, there you have to see if the supplier is a company or not. If a supplier is a company, I'm not using the word body corporate, I'm using the word company, private company or a public company, then in that case 9(5) will not apply. We trust the company to pay the tax on its own. 9(5) is not going to apply. Company will pay the tax and the TCS will be applicable. Okay, the TCS is not applicable where 9(5) applies. So here, if the supplier is a company, then 9(5) is not applicable and TCS will be applicable. Next, now specified premises. Specified premises, you remember, restaurant service other than through specified premises is covered under 9(5). Now what do you mean by specified premises? There has been an amendment. So first, basically now there are 3 clauses, out of which the first clause that I'm going to discuss, it is the same as we studied till now, that declared tariff of any unit of accommodation in the last financial year exceeds 7,500 per unit per day, or any equivalent. Means if you're denoting in USD, then I have to convert it into INR and see it should be more than 7,500. But voluntary declaration is basically the amendment which has been made applicable via the revised corrigendum. So pay attention. Voluntary declaration means you can declare it to be a specified premises. So what was the logic behind this amendment? Why voluntary declaration? This is in line, this definition change is in line with the specified premises used in the context of the GST rates to be applied. Now GST rates are not our part of our course, but that similar amendment they have applied it here. And yes, now I can go for the voluntary declaration. If I have already got a registration for a hotel, I am already a hotel, I already got an hotel which is registered under GST, and if I voluntarily want to declare it under specified premises, then I can do it by the end of the financial year, within the time frame of 1st Jan to 31st March. So 1st Jan to 31st March, I can get it declared under specified premises. From 1st April, it will be a specified premises. But if I'm taking a new registration, I can file a declaration for declaration as a specified premises within 15 days of obtaining the acknowledgement of the registration. So just like composition scheme, that existing registered person wants to go under the composition scheme, he or she can go from the first of the new financial year. But if it is a new registration, you can go right from the day one. Here also you can go from the day one, but ensure you file it within 15 days of not registration, from acknowledgement of registration. Is this clear? Next, composition supplier, just a point to be noted, he can still supply goods through ECO. GST rate reporting will happen and TCS will also be deducted. TDS, TCS you can claim in your e-cash ledger. Services you cannot do. Section 9(5), accommodation and housekeeping are covered in 9(5), but there is an exception, except where the supplier is liable to be registered under 22. 22 means liability to registration basis the turnover, not your section 24, not voluntary registration, only and only liability to registration under section 22. Clear? Let's move. Chapter number 13, returns. GSTR 1A filing. What is the time frame for 1A filing? There is no due date. 1A is available from the letter of due date of GSTR 1 or actual filing, whichever is later, and it is available 3B is filed. So ensure your 1 is filed and your 3B is yet to be filed. You can go for GSTR 1A to furnish or amend the details that you have already furnished. Sir, can I amend the GST of the recipient? No, you cannot amend the GST of the recipient via GSTR 1A. You have to use amendment table in the subsequent GSTR 1. Sir, can I revise earlier periods data in GSTR 1A? Answer is no. Sir, if I amend GSTR 1A, will that impact my liability in 3B? Answer is yes. Sir, if I amend via GSTR 1A, will it impact the ITC of the recipient? Yes, but for the next tax period. So let's say, for example, I have filed May month's return of GSTR 1 on 11th of June. On 12th of June, I filed GSTR 1A. So for the recipient, the impact of 1A filing will not happen in the May month's 2B, which is generated on 14th of June, but it will happen, this 1A impact will happen in 2B of the recipient, which will be generated on 14th of July. I hope this is absolutely clear. Okay, next, invoice furnishing facility, you remember? IFF is for the QRMP people. QRMP, that too M1 and M2. So month 1 and month 2, because after month 3 you will be going for the quarterly filing only. So IFF is not mandatory. It is relevant for only first 2 months, and plus there is a limit of B2B supplies. Basically it is for the B2B supplies. For you to transfer the ITC, the limit will be 50 lakh supplies per month, not the total, per month. Sir, if my supply is, let's say, 70 lakhs, so I have to decide which recipients I want to transfer the ITC to, and there is a limit of how much I can declare, that is 50 lakh. Just a point to be noted, if a person is not required to file GSTR 3B, that is return under section 39(1), then in that case final return is not required. Final return section 45, cancellation, on cancellation you go for the final return. That is applicable only when your GST is cancelled and you were required to file GSTR 3B. There is a very small minor point which is happening here. I'm not using the word 39. I'm specifically using the word section 39 subsection 1, that is I'm talking about GSTR 3B. So all the people like non-resident taxable person, ISD, so TDS deductor, TCS collector, they don't need to file any cancellation return. Okay, the list I've given as the deducted one. GSTR 5A, which contains basically the OIDR online money gaming related supplies, where the supplier is abroad. So when he is abroad and he is taking a registration in India, he has to file this GSTR 5A by 20th of the end, basically of the next month. It also contains the details of supplies of OIDR to a registered person in India. Now here a query comes that, sir, if the recipient is registered, RCM is going to apply, then why to declare that? This is just a declaration which is happening. I don't have to pay the tax on that. So government can correspondingly check whether the recipient is complying with the RCM or not with that particular supply. Next, QRMP exercising or QRMP opting out time frame. Now basically it's basically a time frame which is decided in which you should be declaring or you should be opting out of the QRMP. Now what is that time frame? First of the second month of the preceding quarter. So let's take a simple example. If let's say October, November, December is the quarter for which I wish to go for the QRMP. Now I will have to tell government, right? I will have to tell Nirmala Tai that I wish to go for the QRMP. So prior quarter will be July, August, September. July, August, September. So this will be, the time frame will be 1st August till 31st of October if I want to go under QRMP with respect to October, November, December quarter. Now what is the logic for that? See, very, very simple. This is the first month. At the end of the first month, you should tell Nirmala Tai that, ma'am, I'm not going under monthly filing. I'm going under QRMP. Please don't expect my return, because after month end, you will expect my return by 11th. I'm not going under that. So by end of the 31st October, you need to tell. Similarly, in the prior quarter, 31st July will be covered with respect to July, August, September. So after that, it is 1st August. So the time frame is 1st August till 31st of October. I can notify that I want to go under the QRMP. Next point to be noted with respect to the annual return. Annual return section number 44. If there is a short note which gets asked in annual return, please do not forget to mention about the exemption for the department of the government subject to the audit by CAG or local authority audit, where basically the appointed government auditor is appointed. They do not have to get the annual return filing done. They do not have to file the annual return. This point, if you do not mention in your answer, your marks will be deducted. Another amendment area, if from financial year 24-25 onwards, if my aggregate turnover does not exceed 2 CR, I do not need to go for the annual return. Clear? Next, chapter number 14, import export of GST. Merchant exporter, 0.1% is the concessional rate. Okay, so if it is an intrastate supply, divide by 2, 0.05, 0.05. The merchant exporter cannot go under the option of payment of IGST. Mandatorily, LUT bond he has to file, and he has to export within 90 days from the issue of the tax invoice. Which tax invoice? This is the supplier. He basically supplies to the merchant exporter. So he has to export within 90 days from the issue of tax invoice. So here the tax invoice will be issued within 90 days. He has to ensure the export is done. If SEZ developer or SEZ unit is involved in the transaction, it is always and always going to be an interstate supply. Specific law will prevail over general law. If holding and subsidiary are entering into a transaction where one of them is outside India, can it be an export of service? Answer is yes. Sir, why? These are basically the clarifications which came from the point of view of the definition of the export of service. In export of service definition, one of the conditions is that they should not be establishment of distinct person. From that point of view, these clarifications came. So at the end, you need to learn that holding subsidiary export of service is possible. Head office and branch export of service is not possible. They are establishment of distinct person. And if you have a establishment outside India, so in that case, you will see whether that establishment is incorporated under their laws or not, or vice versa. If outside company is having some branch or some agency or some establishment, but it is mentioned that it is incorporated in India, so it is incorporated under Indian laws, then in that case export is possible because it acquires the status of a person under GST. Okay, but if not incorporated, merely a branch, export is not possible. So we are analyzing the condition of establishment of distinct person that is given in the export of service definition. Okay, with respect to one of the adjustments that comes in the question, in question number 1, they will give you that goods are imported. Let's say they are stating that goods are imported, okay, for, let's say the value is rupees 5 lakh. The value is rupees 5 lakh and the ocean freight is 1 lakh. Ocean freight is 1 lakh. I want you to write one case law with respect to this ocean freight, and the analysis that we are putting down is ocean freight will not be again taxed under GST under reverse charge mechanism. No RCM for the ocean freight, no analysis of import of service that supplier is outside India, I am in India and I am taking this ocean freight service. Why? Because you are going, this ocean freight is going to be a part of this 5 lakh. When they are giving me the value, I'm assuming it is already taken in the part of 5 lakh, because when we do the import of goods, we put the assessable value. That assessable value includes the ocean freight. The freight will be a part of the assessable value on which I'm going to be paying my IGST share. So again, why should I take this under GST? Why should I consider it an import of service separately and again pay GST on that? So that is wrong, right? It will lead to double taxation. This was clarified in the case law of Supreme Court, that is Mohit Minerals case law. Okay, so that you need to remember. I want you to just quote that in the note if possible. Okay, that will prove to the examiner that you know this particular case law and you will get the marks. Right? Next, refunds chapter number 15. Let's start now. Two practical formula oriented questions, that is basically rule 89.4 and rule number 89 sub rule 5. Okay, so that is 54.3.1 and 54.3.2. 89.4 is with respect to the zero rated supplies and 89.5 is with respect to the inverted duty structure. Now just a point to be noted, there are certain notified supplies for which 89.5 is not applicable. So even if the inverted duty structure is there, refund will not be applicable under 89.5. But if that same notified item is tomorrow exported, you can very well claim refund under 89.4. That is allowed. Clear? Okay, let's start. 89.4, 89.5. Before going to the point, I want you to quickly revise. I want to quickly revise the formula with you. So try to scribble it with me. 89.4 formula is very simple. Net ITC into zero rated supply of goods plus zero rated supply of services upon adjusted total turnover. Yes, and 89.5 is net ITC into inverted duty structure turnover divided by adjusted total turnover less output tax payable on that inverted duty structure goods into net ITC upon ITC of inputs and services. Now critical differentiation between here 89.4 versus 89.5 is that rule number 89.4 net ITC means inputs and input services, whereas in 89.5 net ITC means only inputs. Now, what is the zero rated supply of goods and services? Zero rated supply of goods, here you have to compare three values and you have to pick the lowest of the three values. Point number 1, invoice value. Point number 2, FOB value. And point number 3, domestic sale value into 1.5. I hope you're able to remember that, right? And zero rated supply of services, the focus will be on the work completion. So basically, whatever amount you received in the current tax period, plus whatever amount was received in the prior period but the work was completed in the current period, less whatever amount you have received in the current tax period but work is not completed. So this will be added when the work is completed. I hope this is clear. These are just the elements that we discuss. Now with respect to the denominator adjusted total turnover, don't include the exempt turnover unless it is a zero rated, because if you remember, we have covered this, that if a turnover or if a supply is exempt and it is exported, so it will acquire the nature of export, it will acquire the nature of zero rated. Exempt you don't have to include in the part of denominator. Next, e-credit ledger refund claim rejected, recredit in e-credit ledger. So basically they asked this question that refund application was rejected. The accountant wants to recredit the e-credit ledger. Is it valid or not? That will depend on what kind of refund it is and what kind of zero rated supply route I have gone. So in rule 89.4, this is applicable for the zero rated supply provided we went under LUT or bond route. Because if you don't go under LUT bond route and if you pay the IGST, that in that particular case, you are going to be using the e-credit ledger. So there is no e-credit ledger refund that is happening. So here also it will depend. If IGST was paid and then the refund application was filed and it was rejected, there will be no re-credit in the e-credit ledger. Why? Because there is no application for the refund of the e-credit ledger in this case, because you have used your e-credit ledger. So here if the accountant wants to recredit the e-credit ledger, that is not possible. But under LUT bond option, I'm not paying any IGST. My e-credit ledger is there, for which I filed the refund application at 89.4. While filing the refund application, we have to debit the appropriate ledger because you're expecting that amount in your bank. So portal balance has to be debited. And if that application tomorrow gets rejected, I will recredit the e-credit ledger balance. Okay, please remember this. This I have covered. Net ITC, this also I have covered. Minimum refund claim for each head individually is rupees 1000 except in the case of e-cash ledger. So e-cash ledger, even if there is rupee 1 amount lying, then I can claim the refund. CSD, that is the canteen store department, they go for the refund application. We studied along with UIN. So here they will get the refund of 50% of tax paid on inputs, not services or anything else. This was a clarification about what kind of adjustment we will be making in case the supply is cancelled. So please read this, please cover this as I am covering, because this comes from a clarification question. 99.9% will come in a similar form. Advance was received, then the invoice was issued. So I have already issued the invoice. GST was paid but supply was cancelled. Priority number 1, credit note. But if there is no liability means you will be adjusting the liability, right, in the future tax period when the credit note is issued. But if there is no output liability to adjust against, then you go for the refund application and you get the GST back from the government. Okay, but if advance is received and GST is paid, invoice is not issued. I have paid the GST. Now this case is applicable only in case of services, because in case of goods there is no GST on advance because time of supply we have covered it. So here you didn't say specifically goods or services, because guys, when I'm issuing the invoice, I have to pay the GST regardless it is a case of goods or services. Okay, so advance received, GST paid, this is applicable only for services. Supply is cancelled, I cannot go for credit note. I directly have to go for the refund application. Why? Credit note, debit note are always associated with an invoice. So if invoice is not issued, no debit note, no credit note. Chapter number 16, job work. Opening line. Whenever there is any practical question on job work, I want you to open your answer with 2 lines. Point number 1, meaning of job work. Job work means treatment or process on goods belonging to others. On goods which are belonging to others. And second, supply of the job work service is considered as a supply of services as per schedule number 2, regardless of the fact that you might be using your own goods in the process. Now, there is one issue with respect to the job work regarding the time limits. You remember the time limits for inputs, it is 1 year. For capital items, it is 3 years. Further extension of up to 1 year or 2 years by the commissioner. Time period is not applicable and refactories, bricks, tools, dies, that we know. But from where you have to consider this time limit, it depends upon what the case is. Case number 1, principal is sending to the job worker. Then in that case, the time limits will be considered from the date of sending out. And if the time limits are breached, then in that case, it will be considered to be a deemed supply from the date of sending out. So here my focus will be date of sending out. But second case, if the principal is not sending directly, but rather there is a supplier of principal who is sending the goods directly to the job worker. First of all, can principal take the ITC without having the goods received here? Answer is yes. Section number 19 allows it. So in this case, the time limits will apply from the date of receipt of the goods, by the job worker. And even if there is some breach which is happening, then also it will be considered to be a deemed supply from the date of receipt of the goods by the job worker. Okay, I hope this is clear. Okay, next. This is okay, and yes, these were the points. Chapter number 17, assessment and audit. Section number 64, summary assessment. Sometimes they will ask you for a direct note, that write a short note on section number 64. In that case, you have to mention one point without which you will not get full marks, that if the authority is unable to ascertain the taxable person, so we know there is a taxable person, but we are not able to ascertain him. or her, whatever the case may be, then in that case, the person in charge of the goods, he may be a transporter, warehouse operator, whoever it may be, he will be considered to be the deemed taxable person. This is applicable only in section number 64, and it is applicable only and only in case of goods. Next, two cases of withdrawal of assessment order. Sometimes the question is kind enough to mention the section, otherwise not. So if they write that in case of assessment, mention two cases of withdrawal, you will be quoting section number 62 and section number 64. Section number 62 is basically the best judgment assessment which happens, best judgment of non-filers, and section number 64 is summary assessment. Section number 64, summary assessment. Best judgment, the withdrawal happens if you file a valid return within 60 days of the order. Okay, if 60 days expire, you again have additional 60 days, but here one more additional late fee. So apart from the interest and late fee of section 47, additional late fee of rupees 100 per day under CGST, correspondingly under SGST you will be liable to pay. And in section number 64, the withdrawal happens in two cases. Case number 1, where the person against whom the application is filed files an application, okay, within 30 days of the order, then the withdrawal is possible. And in case number 2, the authority, here the which authority is covered, additional commissioner or joint commissioner. Additional commissioner or joint commissioner, if they feel this particular order is erroneous, and instead they can go under section number 74A. So these are the two cases of withdrawal. Sometimes a direct question is asked. Just a point to be noted, in section number 62, that is best judgment. Now best judgment happens when you have not filed the return under section 39 or 45, that is the cancellation final return, and section 46 default notice has been served and 15 days have expired. Now what I'm trying to reiterate here they have used the word return not filed under section 39. They have not used the word return not filed under section 39(1). So in section number 45 cancellation, we specifically covered 39(1), that is only 3B, but section 39, it covers 3B under 39(1), plus it covers other cases like NRTP, like ISD distribution. All those things are also covered under section 39. Okay, so these are small differences, maybe ICA catches, I don't care. From our side, we should be very attentive to these small things because it will change the answer. Okay, section number 66, special audit. Special audit is never a first step itself, rather it is always during some stage of scrutiny, during some stage of inquiry, some proceedings should be pending. And the similar thing, that this point I've told that it should be during some pending proceedings, the similar thing applies for summons, section number 70. And similar thing applies for provisional attachment 183. So 83, not 183, 83. Provisional attachment by the commissioner. Same thing applies. Okay, so these three things can never be the first step, rather they will be only when some proceedings are pending. Reason for the special audit, seeing the nature and complexity, the problem should be with respect to the valuation or with respect to the ITC that the credit is not within normal limits. So if they give you some other reason, in IBS they had asked this once, that the person, the authority, obviously with the approval of the commissioner, they feel that the rate is wrong, the rate applied of GST is wrong, and they want to go for the special audit. No, it is not possible. Apart from, they can ask this 65-66 difference also, but I don't think there is any point which is of mistake area there. So ensure 65-66, especially chapter 17 and chapter 18. One question, one or two questions directly you are going to find. So do these chapters well. Chapter number 18, inspection, search, seizure, arrest. Not a big deal, very straightforward chapter. Approvals, all the approvals are from JC or above except arrest where the commissioner is involved. Do learn the specific reasons for inspection, search and liable for confiscation. Now I will quickly revise that as well, although I was not planning to, but okay, we'll revise it. Inspection reasons, specifically you have to learn suppress, claim, contravene. Suppress stock, suppress supply, claim ITC, contravention with intention to evade the tax, plus a case of warehouse transporters, warehouse owners and transporters. There also the inspection can happen, because the JC or above have reasons to believe that these things are happening. So these specific things need to be quoted in the answer, because direct question is possible. Search, what is the reason for search? First of all, remember, search can be pursuant to inspection or otherwise. And what is the reason for search? Either there are some goods which are suspected that you have the goods which are liable for confiscation, documents are secreted, the documents or goods are to be used in some proceedings which are going under the law. Okay, so their search can happen. And liable for confiscation, you can learn a short name, conveyance cars. Conveyance cars. Now conveyance directly you have to learn that conveyance can be confiscated, and cars, 4 points you have to remember. Contravention to evade the tax, you didn't account for the supply. You supplied, you engaged into the supply without taking registration, and supply or receipt you did in contravention to evade the tax. So 4 points plus conveyance, 5 points you need to quote in the answer. This is section number 130. Okay, so point to tell was that these three cases, exact reasons you should be knowing. You cannot go for, like in Hindi we say tukkebazi. So you cannot just try to write something and get marks. No, it will not happen. Specific reasons are there. Chapter number 19, demand and recovery. 74A, notice a golden rule you need to remember, that taxable event needs to happen. If taxable event is not there, 74A cannot happen, because once the taxable event is there, then only there will be a tax, and then only with respect to the tax interest penalty 74A can follow. So if I am involved in the offense of invoice without supply, no supply, only invoice issued, it is an offense. So I will be caught hold of under section number 122, not 74A. Okay, next. Now this is one of the most frequent query asked areas. Please pay attention. Two offenses: non-payment of self-assessed tax and non-payment of amount collected as representing tax. Subsection 11, everyone you learn that, sir, in these cases, if there is a 30-day default from the due date, 30-day default from the due date, then in that case, for sure penalty is going to be there. Yes, I agree that there will be no penalty waiver in these cases, but provided a show cause notice is issued. So if, for example, January month, today we are in the month of April 2026, January month, I have not filed 3B. 30 days delay has happened. It is a self-assessed tax. I have declared in GSTR1 but not filed 3B. But there is no show cause notice yet. And today, let's say I file. Today, let's say I file the GSTR 3B. I pay the interest. I pay the late fee. Will I be paying any penalty on my own? No, because there is no show cause notice. I hope you're able to remember this. I hope you're able to understand this and then remember it for the exam, that unless and until the show cause notice is there, there will be no involvement of 74A. In questions, they will use the language that show cause notice is not issued yet, or before the issue of show cause notice. In that case, we will assume that show cause notice is going to be issued, but there is no mention of show cause notice in the question. Like the Vikramaditya question, RTP question, I think it was a Jan 26 RTP question. They had mentioned that show cause notice is not issued yet, and before that I try to take the penalty waiver and pay these amounts, but 30 days delay has happened. In that case, penalty is going to be applied. But there is no mention of show cause notice, nothing. Just mentioned that 3B is filed late. Regardless the 30 days delay, I'm not going to pay the penalty. Clear? Okay. Adjudication order, which is to be issued in pursuance of the directions by any tribunal, court or appellate authority, it needs to be issued. Specific time limit, not the general time limit of 12 months from the issue of show cause notice. Here specific time limit, it has to be done within 2 years from the communication of the said direction. Section 76 case, if it is invoked, it will be mentioned in the question, tax collected but not deposited. 2-3 points to be noted, very peculiar to section 76. There is no time limit for issue of show cause notice, but there is a time limit for order, that is 1 year from the issue of show cause notice. Another point to be noted, 18% interest will be applicable, but not from the next of the due date of payment of tax. It will be from the date of collection of the amount as tax. You have collected the tax in the name of government, you did not deposit to the government. So if 76 is invoked, the interest will be from the date of collection of the tax. And as you know, ICI, if the date of collection is coming, let's say 10th, interest will be from 11th. Okay, because that is GC, it is coming from General Clauses Act. Monthly installment system, section number 80, that you remember, maximum 24 installments are allowed. They are not allowed for self-assessed tax. They are also not allowed where amount is less than 25,000. All in all, there are 4 cases where that benefit is not applicable. First is self-assessed tax, not applicable. Second, amount is less than 25, equal to 25, ICI will try to play. So equal to 25 or more than 25, you can go for the benefit can be availed. But less than 25,000, if the amount is there, no installment system can be availed. Other 2 cases are where recovery process is already going on with respect to some other case, some other amount. And fourth, last year you were denied the permission for this section benefit. So this year also we will not give you the section 80 benefit. Okay, is this clear? Next, section number 21, offenses and penalties. Let's see. No penalty for minor breach. Minor breach means amount involved is less than 5,000. Again, equal to 5,000, ICI will try to confuse you. 5,000 or more than 5,000, similar to like this, it is not a minor breach. Arrest with the sanction of commissioner. The minimum amount for arrest is more than 2 CR, but only for one offense it is more than 1 CR up to 2 CR. That is 132(1)B offense, which is invoice without supply. Only for one offense. Okay, the lower limit is there. but otherwise it has to be more than 2 CR. Cognizable offense. What do you mean by cognizable versus non-cognizable? Cognizable means non-bailable offense. Non-bailable, it does not mean you will not get the bail itself. It means the bail will not be given as a matter of right by the assistant or deputy commissioner. Rather, you will have to get it from judicial magistrate. Okay, so these are serious offenses. Arrest warrant. Without arrest warrant also the arrest can happen. The person will be informed the grounds of arrest in writing and he will be produced before the magistrate within 24 hours. So here 4 offenses, that is supply without invoice, invoice without supply, amount collected but not deposited to the government beyond 3 months, and fraudulent ITC. These 4 offenses, if they are more than 5 CR, it becomes a cognizable offense. All other are non-cognizable offense. And there is another term, cognizance. Cognizance means taking judicial note of the matter. So cognizance is something else altogether. Cognizance means taking note of the matter. Here only a magistrate of first class can take the judicial note of this. So basically, if I go to a lower authority, they cannot take the note of the offense. So first class magistrate needs to be there, and that also will be after I have the approval, or I should say sanction of the commissioner. Next, 132(1)(b), that is the invoice without basically supply, no compounding. Okay, so no compounding is happening in 3 cases. 132(1)(b), no compounding. All other offenses, if you have been allowed to compound once in life before, you cannot compound it again. And third, if conviction order is already here, then again no compounding. Apart from that, one more point to be noted: compounding in GST law does not impact the status of offense proceedings and whatever the prosecution proceedings are happening in some other law. GST law, it will be compounded. But let's say the case is going under FEMA as well, no impact. Compounding of offense, commissioner has the authority and it can be done before or after institution of the prosecution proceedings, but conviction order should not be there yet. Okay, next, chapter number 22, appeals and revision. Who will be appellate authority? Depends upon who the adjudicating authority is. If the order is passed by additional commissioner or joint commissioner, then in that case the appellate authority will be commissioner, but don't forget to write appeals because this is appellate wing that we are talking about. If order is by the deputy or assistant commissioner or superintendent, then it will be not below the rank of GC appeals. I hope you remember the basic chart. Commissioner, AJ, DA. So basically commissioner, additional joint commissioner, deputy assistant commissioner. So deputy or assistant commissioner above is GC appeals. So here minimum GC appeals. Okay. 108, that is a revisionary authority. There is a word used, record. Record means on the basis of which the revisionary authority is undergoing the revision. So record means whatever is available at the time of examination by RA. Order can be of, let's say, January month. The revision is happening in the month of December, and there is some order which has come, there is some observation of the CAG which is passed in November. So I cannot say that during my original order January this record was not available. No, record means not when the order was passed, but record means whatever is available at the time of examination by RA. And who will be RA? RA is basically your senior. So additional or joint commissioner, senior is commissioner or principal commissioner. Deputy assistant senior is additional or joint commissioner. Just a point to be noted, appellate authority cannot refer the case back to the adjudicating authority, tribunal can. Revision under 108, an order can be revised only once. Revision order cannot be revised again. This is the part of fetters, that is restrictions of revision. Fetters of revision. So one particular order you can revise once. And revisionary order, if that has some mistake, you cannot revise it again. Section 121, 4 orders. What is section 121? Non-appealable orders is the heading. 4 orders we cover there. RTP 80. RTP 80 is the installment benefit. Section 80, retention of proceedings, retention of the books, transfer of proceedings order, and prosecution launching order. So these 4 cases are non-appealable, but guys, they can also not be revised under section number 108. This is commonly missed by students. In section number 108, you cannot even revise these particular 4 orders because 108 states subject to 121. So no appeal, no revision. Next, partial integration has been confirmed in the revisionary authority 108. What does this mean by partial integration, sir? See, basically one of the fetters is that RA can pass an order on point not raised and decided in an appeal before any of the authority. Now, what do you mean by not raised and decided? If there is an order which has 4 matters, 1, 2, 3, 4. 3 and 4 matters are raised before an appeal to, let's say, tribunal. So here, first of all, the revisionary authority can revise with respect to matter 1 and 2. And out of 3 and 4 also, let's say matter number 3 is decided, but 4 there is no order given on matter number 4. So matter number 4 was raised but not decided. So revisionary authority can ultimately give its order with respect to 1, 2 as well as 4, not 3, because 3 is raised and decided. And what is the time limit for such orders? Where it wants to revise the order related points which have been appealed, it is 3 years, that is the normal time limit, or 1 year from the order in appeal, because then this particular order of tribunal will come, then the revisionary authority can check that what is raised and decided, and on other matters it can go for the revision. But time limit 3 years original, that is from the original order, or 1 year from the date of order in appeal, whichever is later. So basically, in other words, we can say that the revisionary authority wants minimum 1 year to act upon it. Yes, single member bench in a tribunal. So normally there is a judicial member and a technical member. But if the amount, basically there are some conditions involved, 3 conditions involved. If the amount involved is up to 50 lakh, second condition, it does not involve a question of law, it involves a question of fact. So for example, return was filed or not, portal was working or not, something was issued or not. These are question of fact. Interpretation, section analysis are question of law. So question of fact, you can go for single member bench, okay, not question of law, and precedent approval is required. If these 3 conditions are satisfied, single member bench is possible. Recently, it was clarified that this 50 lakh limit is going to be cumulative in that particular order. Whatever periods are involved, whatever matters are involved, everything total, tax, interest, penalty, whatever it may be, you are going to take the total. Okay, next. Appellate tribunal is a final fact-finding authority. Can we say that? Absolutely yes, because to the High Court, the power is going to be exercised only when there is a substantial question of law which is involved. Substantial question of law needs to be involved. So with respect to fact, we can say it is a final fact-finding authority, although one can argue that we can go for a writ petition under High Court, but that is in general judicial process, not under GST law. Interest on pre-deposit refund. Now basically when I go for the basically the pre-deposit amounts, and if I win the case, I'm going to get the refund. Now here there are a couple of mistakes that happen in the paper. You're not going to get the refund of the admitted liability. Okay, you are going to get the refund of the disputed tax 10%, whatever you pay, that is going to be refunded. Now refund will be with interest. Interest will be 9% per annum, because this is a litigation case that is happening, and the interest will be not from any expiry of 60 days from the refund application or anything, but rather from the date of payment. So if I'm paying the pre-deposit on 16th, I will take the interest from 17th because of the GCA. Okay, but you are not going to take 60 days or expiry of 60 days here. With respect to this only, I just wanted to clarify one thing, that please ensure Jan 26, although it will not be repeated, Jan 26 question on the refund, where it had many students had a query that, sir, in that particular question 9% interest has not been taken, rather 6% interest has been taken. Why? It comes from a case law that 9% interest will be given only when there is a delay from the department side to refund the amount beyond 60 days from the date of order of appeal. Basically, the appeal order is given not from the date of order of appeal, but rather application filed pursuant to the appeal order. So in that case, if there is a 60 days delay, 9% interest is given. In that question, there was no 60 days delay with respect to the order of that authority which was covered in the question. But the 60 days delay was happening from the original order, from the original application that was filed for the refund, and it was unjustly rejected. Will not be able to get what I'm trying to say without seeing the question. Okay, I have discussed this, but it was in the Hindi English mix video. Try to cover that question. If there is any query, reach out to me. I will just try to repeat this again. I will try to explain it again. There is an application which I filed for refund. Okay, RFD 01. It was wrongly rejected. Then I filed an appeal. I won the appeal. Here I won the appeal. Now the government, the department has refunded me the amount well within time, which was with respect to basically the department has refunded me the amount within time after the order was passed by the authority. So there was no 60 days delay with respect to the order of appeal. That 60 days department has complied. But if you see, 60 days delay has happened from the original refund application which was rejected wrongly. So department says that we will give you 6% interest, not 9% interest. 9% interest is only going to happen if there is a delay beyond 60 days from the refund application filed in pursuance of the order in appeal. Are you able to get it? So here they gave me 6% interest because this application was wrongly rejected. Okay. And so what if there was a 60 days delay here? So till the expiry of 60 days, I will get 6% interest, and beyond that, I will get 9% interest. See that question. Next, appeal to the High Court against two orders, basically either state bench of the tribunal, plus it should involve substantial question of law. Okay, but not two cases, basically two conditions, that against state bench of the tribunal, and plus it should involve the substantial question of law. Substantial question means it should involve the rights obligations, it should affect the rights obligations of the parties involved. And if the order is passed by the principal bench of the tribunal, if the order is passed by the principal bench of the tribunal, in that case, the appeal is directly filed to the Supreme Court. And just you need to remember this, that matters of anti-profiteering involving ITC issue and place of supply, if the order involves at least one issue of the place of supply, then 100% it is going to be heard by principal bench of the tribunal and not by the state bench. Is it clear? Okay, let's proceed. This particular point is done. I have already covered. Next, pre-deposit limits, obviously very important, but I think everyone does it. This is just to reiterate that there was an amendment last time. So pre-deposit, whatever is your admitted liability that you need to pay, first we'll discuss appellate authority, then tribunal. So admitted liability means you have to pay the tax, interest as well as penalty, and then you have to see the balance disputed tax, and that balance disputed tax, 10% of that amount you have to pay, subject to 20 CR under CGST. Correspondingly under IGST it will be 40 CR. Appellate tribunal, admitted liability, again you have to ensure it is paid. In addition, 10% of CGST in dispute. So in addition means 10% you have paid to the appellate authority. For the tribunal, additional 10% you have to pay, subject to another 20 CR. And again under IGST that would be 40 CR. Okay. If it's a penalty order, so for example, it's a section 129 penalty. You remember section number 129? That is whether he comes forward or not. So in that case, the amount of pre-deposit will be, since there is no tax, it is 10% for the appellate authority, another 10% for the appellate tribunal. Just one point I remembered, section number 129, there are certain cases where the proceedings of section 129 cannot take place. Sometimes I have seen that people don't know about this topic. Ensure you are covering this topic well. There are certain cases like error in 1 or 2 digits of your document or vehicle number, those kind of spelling mistake in the consignor consignee name. So in those cases, technically it is a contravention of law, but the section 129 proceedings will not be invoked. Instead, 500 rupees and 500 rupees CGST SGST penalty will be imposed. Ensure you are covering that properly. Then we have section number 120 that basically applies the monetary limits for the department to file an appeal. So to the tribunal, High Court or Supreme Court, 20 lakh, 1 CR, 2 CR. If the case is falling below these amounts, then the department is restricted from filing an appeal. Okay. Now when I say the case is falling, means the amount involved is falling below this amount. What do you exactly mean by amount involved? So understand, if tax is involved, then you have to ignore penalty and interest, because this is the base amount. The tax amount you have to compare. So for example, there is an order of the appellate authority where the tax involved is, let's say, 16 lakhs. There is an interest and penalty. The total is going, let's say, 7 lakhs. So if someone applies the total of 16 plus 7, it will very well cross 20 lakh. And you will say that appeal to the appellate tribunal is possible. But no, you just have to focus on the tax, 16 lakh. It is not 20 lakhs. In that case, appeal is not possible. Right? Next. Limits are not applicable in some cases. Now there are basically certain cases where these monetary limits will not apply. Like the law is held to be ultra vires the constitution, or the rules are held to be ultra vires the law, the notifications are held to be ultra vires the rules, or the basically the act itself, or there is some stricture adverse comments passed. Apart from this, the main 4 chapters you have to learn PCRV. In PCRV, the basically the chapters are the place of supply, classification, refund, and valuation. In these 4 cases, there is no applicability of the limit. The department can go for an appeal. Okay. And there is a difference between refund and erroneous refund, right? Refund means it's a refund order. The limit is not going to apply. And when we say erroneous refund means the refund is already disbursed to the applicant, that particular person. So in that case, the limit is going to apply. If it is a composite order, more than one appeal demand notice covered, you have to apply the limit on the total amount of the whatever the tax or interest penalty, whatever you are seeing. Okay, whatever this particular point we are seeing. So you have to apply the limit on the total cumulative amount. Sir, what if interest penalty is there but tax is not there? Then you see the total of interest penalty, whatever is involved. But if tax is there in the figure, then you have to exclude the interest penalty. Next, advance ruling. To obtain the advance ruling, you may be registered or you may be even desirous to be registered. And authority of advance ruling minimum rank is going to be JC. Okay. Now let's move to the customs part. Let's start. For the customs law, chapter number 1, levy and exemptions and definitions. Let's see. If they ask regarding the constitutional power to charge the custom duty, ensure in your answer entry number 83 is there. Along with that, you can write about the other articles also, the basic power to charge and everything. But entry 83 of the union list, that is the union list, state list and concurrent list, entry number 83 has to be there in your answer. Okay, this is just to reiterate. Goods exported for repairs abroad and re-imported. Basically, I'm talking about section number 20, read with the concession table. Now, in the concession table number 1, in case of re-import, we have some concessions. That is, you don't have to pay the duty again on the machine that you were imported. Basically, it is being re-imported, originally imported, exported for repair, and now it is imported back. In that case, there is no duty on the cost of the goods, but you have to pay the duty on fair cost of repairs, material. So this is the fair cost that I'm talking about. It may not be even actually incurred. It may be covered under warranty, but on the fair cost, you have to pay it, plus insurance and freight both ways. Now, this is when the same goods are coming back, not in case of any replacement. Very finely, very in a very small point, IC had tested this, that the machine was exported for the repair, and meanwhile, to avoid any impact on the business, that person had sent another machine. So on another machine, you're not going to get the concession because it is not the same machine. So there again, on the import, on the transaction value, on whatever that assessable value is, you have to pay the duty again. Okay, IGCR rules. Now I think everyone does it properly. Till 2 attempts back, people didn't used to do it. So here the report is going to be filed on a quarterly basis, not monthly basis. You can send the goods to the job worker for maximum 1 year. And for the re-export of unutilized goods or defective goods, people generally directly write 1 year. No, you don't have to directly write 1 year. First state that the period will be as per the notification that is basically asking us to apply the IGCR rules. If it is not mentioned, then it is 1 year from the import, plus subject to 3 months extension by the commissioner. Okay, periods covered. Now section number 13, section number 23 and section number 22, very important. Section number 13 is pilferage. Section number 23 is lost, abandoned and destroyed. Section number 22 is abatement in respect to the damaged goods or deteriorated goods. Now the periods that I'm going to cover, that will decide whether I'm going to get the benefit or not. Okay, section number 13, pilferage, it needs to happen. What is the time frame covered? After unloading and before the order is passed, either for warehousing or for clearance of the goods. So it is possible that the warehouse goods are pilfered. Are we going to get the benefit under section number 13? Answer is no, because till only order is there. So warehouse goods are not covered in section number 13. Here, lost and destroyed we cover separately, and abandoned we cover separately. Abandoned time period is just like section number 13 till the order is given for clearance or warehousing. But is it possible that the warehouse goods can be abandoned and the title can be relinquished? Answer is yes, not under section 23, but rather under section 68, that happens in warehousing. And lost and destroyed, it is still actual clearance. It is still actual clearance means the warehouse goods are also covered. Okay, and section number 22, damaged, deteriorated, A, B, C, 3 clauses are there. Before or during unloading, after unloading but before examination, after unloading and before the examination of the goods, and third, warehouse goods. So in the first case, both the things are covered, damaged and deteriorated. Please mark these words very carefully, otherwise you will commit a mistake. In the paper you have to see what word they are using, and in B and C only and only damaged word is used. And if this benefit is given, basically what is the benefit in section number 22? I get the abatement of the duty. So for example, the value of goods falls by 10%, the duty is going to fall by 10%. I hope this is clear. Okay, next. This period covered I have done. Section number 22, this I have covered. Minimum customs duty payable is 101, but the minimum refund is going to be 100 rupees. So basically the lifafa that we say, the money that we are going to pay to the government, Nirmala Tai is 101, and while refunding, Nirmala Tai will take rupee 1 back and give me 100 rupees minimum refund. 3 points purely for true and false or validity, invalidity. Indian customs water, it is up to the exclusive economic zone, that is 200 nautical miles. Maximum depth of sea water in the continental shelf, it is 200 meters. And stores definition is not applicable for vehicle, it is applicable only for vessel and aircraft. I hope you will remember this. What is stores? Tell me, what is stores? Stores is basically for immediate use, for emergency. So they are not actually traded in the course of business, but rather by the fact of the definition itself that they are coming into India or going outside India, the definition becomes applicable. Basically, the import-export procedures become applicable, and for this we have special provisions in chapter number 5. Okay. Next, chapter number 2, types of duties. Section number 8b, that is safeguard duty. It is possible on provisional basis, but only for maximum 200 days. No safeguard duty if I am importing from one developing country and the total share of that from that particular country compared to the total, it is not crossing 3%. So basically, share of that particular import compared to the total, it is not exceeding 3%. So up to 3% of total import is there, then I cannot charge any safeguard measures. But if it is coming from more than one developing country, then individual share should be less than 3 and the aggregate should be up to 9. Please mark this. This is up to 3, this is less than 3, and this is up to 9. Okay. CVD subsidized and anti-dumping duty retrospective is possible, but not beyond 90 days. Calculation of anti-dumping duty is lower of dumping versus injury. What do you mean by dumping? Dumping means normal value minus export price. So basically, if the normal value is $100 and that person exports at 70, so he is doing basically the dumping of 30. And injury is non-injurious price, or you can call it as fair selling price in India minus landed value. Ultimately, just understand, inherently this export price plus basic customs duties is landed value only. Okay, so for example, export price is 70, this will come out to be maybe 80, 85. And let's say NIP is 100. So whatever the 20-15 difference, that is the injury which is happening. So lower of the dumping and injury is going to be picked as an anti-dumping duty. It is possible in the question that they may not give you the normal value directly. You may have to construct it. So for example, they will give you the price of export to a third country. So that you may have to pick. Okay. So constructing the export price, constructing the normal value is also possible depending upon how the facts of the question are. Next. Anti-circumvention measures are possible in subsidy duty and anti-dumping duty. What is circumvention? Circumvention means basically you're trying to avoid our duty by changing the description, by changing the name, by changing the origin, by changing the form, or anything else by which our duty is rendered ineffective. So in that case, we can take anti-circumvention measures and we can charge the duty to that other article as well, whatever the change you have tried to make. Okay, but please make a note here that in this case, we will have to go for the inquiry. The government will go for the inquiry, and the government cannot impose the duty prior to the initiation of inquiry. The prior to it cannot be prior to the date of initiation of inquiry. This can be tested separately. Next, section number 8 and section number 8A that deal with basically the emergency powers. 8 is export, 8A is import. Now, if I compare both, maybe some true, false MCQ can be asked. There are two primary differences. Please understand, 8A import duty, the goods should be specified in the first schedule. In 8, they have mentioned may or may not be specified. So here in essence, for 8A, imposition is not happening, only enhancement is happening. The goods need to be specified in the schedule number 1. And second difference, in 8A, there is another condition that earlier notification, if any, under 8A should be placed before the parliament and should be passed with or without modification, that we don't care. But this condition does not exist in section number 8. Next, now you remember, if there are warehouse goods and if the warehouse goods are sold, then we compare the last transaction value. We compare the last transaction value with the assessable value and we pick whichever is higher. Now this higher comparison is done for the purpose of charging of IGST, not for the purpose of BCD. For the purpose of BCD, the assessable value is going to be picked. That will be on the basis of the price paid by the original importer to the seller. Okay, next, classification. Just small point, classification is a very simple chapter. Project import. Now for the project import, there are two things. Limit of spare parts, raw material and consumable store. There is a limit on out of the project import how much can be spare parts and raw material. So that is only up to 10% of the total. An individual item exemption, if any, is still going to apply in the project import as per the Supreme Court case law. Okay, next, chapter number 4, valuation. The BCD rate and the exchange rate, the most important table which will help you in solving the question. The BCD rate in Hindi, as we say, taza means fresh. I want the latest rate of the BCD. So if I am importing the goods and filing for home consumption, I will pick the BCD from the letter of presentation of the bill of entry, because advance is also possible. and I will compare that with arrival in case of vessel and aircraft, but in case of vehicle and aircraft, but in case of vessel, I will compare entry inwards date. Sir, why only in vessel you are comparing entry inwards date? Because guys, only and only in vessel case, entry inward and entry outward is the procedure that is applicable. Entry inward, entry outward is not applicable in case of vehicle or in case of aircraft. I hope I'm making myself clear. So you will pick the later of these dates. If it is a case of warehousing and then I'm clearing, I will pick the rate of the I will pick the BCD rate as on the date of clearing the goods, that is filing the bill of entry for home consumption, because this will be the fresh rate. But for the purpose of rate of exchange, that is from converting the foreign currency into INR, here you do not need any kind of fresh rate. You have to pick the primary date. Primary date means home consumption date. If I'm going for the home consumption, you have to pick the date of bill of entry regardless of the fact that it is filed in advance or not. In case of warehousing, the primary document is the bill of entry, that is into bond bill of entry when the goods are put into the warehouse. So that date you have to pick for the rate of exchange. Next, buying commission is going to be excluded always. Shooter side always excluded if non mentioned explicitly. Now commission is mentioned but not mentioned explicitly whether it is a buying commission or a seller commission. If it is given seller is the commission is paid to a local agent in India. Commission paid to local agent in India, it means you will assume this as a seller's commission, because in general buyer's commission and the buyer's agent would be outside India and this would be the seller's commission. So you have to add it. Okay. But if it states explicitly as a buying commission, exclude it. Engineering, design, development, artwork, all these kind of expenses will be a part of the assessable value only if two conditions are satisfied. These are incurred abroad, not in India, and second, they are necessary for this import. Balance condition for sale or anything else does not matter. Okay. Next, cost of packing, labor, material, cost of container. Do not see whether it is a condition of sale or not. If it has been incurred, it has to be a part of the assessable value. Okay, with respect to the imported goods. Condition for sale thing, you are going to apply for royalty or any other payments that accrue. Air transport case, please ensure 20% limit you are checking with respect to not only transport. That 20% includes entire transport, not only the airport to airport freight, but the local freight is also included. Loading, handling is also included up to the point of importation. I'm making a small diagram that will just help you revise basically what we are trying to calculate in this entire scenario of valuation. So let's say this is a USA port. Okay. And let's say this is a Mumbai port. So I'm taking the example of a vessel, for example, and here there is a, let's say, just a minute. Here there is a small vessel and this is going to be coming into India. So basically we have to calculate the value at this point. This is a CIF value. Whatever expenses are incurred after this, you don't have to include it. This is the price of FOB. Okay. And this is the price that we are going to calculate. That's why ship demurrage or light rate charge that are incurred at this point are added as a part of the valuation. Okay. Here, let's see. 20% covers this that I have mentioned. In rule number 4, if you have more than one price available, you have to pick the lowest one. In rule number 7, deductive value method, if more than one price is available, you have to pick the greatest aggregate quantity. Greatest aggregate quantity means, let's say for example, 100 units are sold at rupees 60 and 200 units are sold at, let's say, 50 and 180 units are sold at, let's say, 58. Then I will be seeing the greatest aggregate quantity, here it being 200. I will be picking the price of 50. Okay, certain other valuation points to be noted. Ship demurrage will be part of your valuation. Then light rate charge will be a part of the valuation. But in the bracket I have written deemed to be included in 20%. Now this is one assumption. ICA had taken both the views. I feel you can take this view. Out of the two, ICA has also taken. So my assumption and my analysis says that if somewhere we are applying 20%. Now sir, 20% limit, where are we going to apply? See, in case of air, always you need to check 20% limit. But for example, in case of vessel, 20% will be applied only when the port to port expense, this particular freight, is not given. Then in that case, I will have to apply 20% limit. If actual freight is given, I don't need to compare anything else. Right? So if somewhere I'm picking 20%, that 20% is deemed to include ship demurrage and light rate charge. That is the line given in your ICA material also. So in that case, actuals have to be ignored, right? Demurrage charges for delay in the goods clearance from the airport, you have to exclude it. You can exclude that because it is incurred after the CIF price. Transshipment related cost to be excluded. Payment for right to distribute or resell imported goods. See if it is a condition for sale. If yes, add it, otherwise ignore it. Calculation note. If actual is not given, we have to compute the insurance cost 1.125% of the adjusted FOB. So for example, I will give you in this context only. Just a minute. See, for example, here they have given me a light rate charge as well. Okay, light rate charge also, and insurance cost is unknown. Now, a lot of times I have seen people adding the light rate charge. Sir, but you said the light rate charge is to be added. Yes, I am saying light rate charge is to be added, but at what point? So first I want you to calculate A, that becomes, I think you know this method, adjusted FOB. So adjusted FOB that you are going to calculate, please don't add light rate charge here. Don't add light rate charge as a part of the adjusted FOB, because you are going to be picking insurance cost. I'm assuming I'm taking in the question that the insurance cost is not available. So we are going to be picking 1.125% of the adjusted FOB. Now, if you add the light rate charge as a part of adjusted FOB and pick 1.125%, your answer is going to go wrong. Okay, because adjusted FOB does not include the light rate charge. It is incurred at this point. So light rate charge, ship demurrage charge, you add it along with the transport and insurance cost. So let your adjusted FOB come, pick that 1.125% insurance, transport, ship demurrage or light rate, and these four you add it after FOB, and then your total CIF will appear. Okay, next. Material and component, if supplied by the buyer free of cost, it has to be a part of the valuation. Then chapter number 5, import export procedure, recent amendment alert. For the baggage rules, you have to apply 35% rate. Don't add SWS. Chapter number 4, there is no change. SWS is going to be added always, regardless the question states or not. Sometimes question will directly say that just calculate the BCD, so you don't add SWS. But here in chapter number 5, with respect to the baggage rules, the baggage duty rate is going to be 35%, not 38.5%. And balance with respect to the annexure 1 items. Now here a lot of people are making mistake in the note. Please pay attention. In the annexure number 1, that is alcohol more than 2 liter, okay, firearms, cartridges more than 50, cartridges more than 50, or maybe with respect to the cigar more than 25, cigarettes more than 100. So here the GFA, basically more than the limit, is going to fall under annexure 1. Up to the limit you are going to test it under the GFA limit. But what about the excess items? You are going to mention a note. You will say that whatever these items are exceeding, the 35% rate baggage is not going to apply. Then in the second line you will write, for the cartridges more than 50 and firearm, for these two items the rate is going to be 70%, not 70 plus 10, 70%. And for other than that, cigarettes, alcohol, tobacco, there what is going to apply? Respective CTA rates are going to apply. What BCD rate is going to apply? The respective CTA rates are going to apply. Okay, so please ensure you are writing this note correctly. If you want, you can practice Gregory Peg question. Gregory Peg question, the person's name is Gregory Peg in that particular question. They have given this in the link of the revised corrigendum. Okay, next. Now with respect to the import, the basic documentation in case of vehicle is import report that needs to be filed within 12 hours of arrival, and vessel aircraft, it is IGM which is to be filed prior to arrival. Bill of entry time limit, it can be asked as a separate direct question before end of the day. It may be a holiday, I don't care, preceding the day of arrival. Board may prescribe a different time limit but not later than the end of the day of arrival. Advance filing is applicable. Yes, it is possible, but not more than 30 days of expected arrival. So expected means 1 or 2 days here or there, means earlier or maybe later, it is possible. But yeah, expected arrival and advance filing 30 days prior to the expected arrival. Okay, so these 3 points I want in your answer with respect to the question of the time limit for filing of the bill of entry. Provisional assessment. I hope you have again done the amendment. Provisional assessment regulations are new, so there is no like mistake area in there. It's just an amendment, so ensure you are doing that properly. And there is no change in the interest calculation. Interest calculations are still going to happen from the first day of the month of provisional assessment, where my payment is due. If there is a refund, then I have to see 3 months from the finalization. If the government does not pay me, then interest will be applicable at 6% per annum. My payment to the government at 15% per annum. Okay, so this is done. amount refund is done. Deferred payment duty, it is not for everyone. It is applicable for importers certified under authorized economic operator tier 2, tier 3 program or authorized public undertaking. If you are able to remember one more thing, that they should be approved by the International Directorate of Customs. Okay. Laptop computer, one laptop computer is allowed duty free to every adult, but not a crew member. Only age condition is there. It can be a person of the foreign origin. I don't care. Only age condition is applicable. Annexure 1, I have covered this point. I have covered till limits. I have covered. Okay, just one specific point. Domestic refrigerator of capacity up to 300 liter is covered in Annexure 3. This you can use in rule number 6, that is transfer of residence. So transfer of residence limit, if you remember, 60,000, 1 lakh, 2 lakh and 5 lakh, 4 cases, right? Depending upon how much stays abroad. So in those 4 cases and rule number 6, those are in addition to the GFA limit. And here rule number 6, please understand the question will specifically have to state that the residence has been transferred. In general, it has been mentioned that a person is, coming back after 1 year. You will not apply rule number 6. It has to be mentioned as a transfer of residence. And this particular up to 300 liter, yes, it is a part of Annexure 3, which is allowed under rule number 6. If it is more than 300 liter, Annexure number 2, not covered in rule number 6. Once they have asked the question, Mr. Varun had bought a microwave. So they can ask for a refrigerator as well. Infant, when the infant is traveling, you are going to get the GFA limit. Only and only, limit means only basically the duty free you are going to be allowed is used personal effects. Use personal effects, provided he or she is traveling. Okay, and infant means up to 2 years of age. Anyone coming from Nepal, Bhutan, Myanmar by land, so Indian origin, foreign origin, we don't care. Only use personal effects are going to be allowed, nothing else. Jewelry allowance will be allowed only if you stay more than 1 year. Then you have the limits as per gender, basically a man versus woman. So that is simple. And jewelry is never a personal effect. Question may try to confuse you. That person says that jewelry is a part of my daily life. No, it is not. Next, section number 48, that is a disposal of goods not cleared. I know chapter number 5 mostly is weak for a lot of students. So at least try to cover something or other. Okay. Section number 48, disposal of the goods not cleared. If 30 days have crossed and you have not cleared the goods, or you have relinquished the title, then in that case, the disposal happens, public auction happens. Then the bill of entry is filed. So point to be noted, here a consolidated buyer-wise bill of entry is filed, not by the PO, not by the highest bidder, but by the custodian. Duty is paid by the highest bidder, but the payment happens by the concerned custodian. Supplier stores, as I told you, there are special provisions. 2-3 points I wanted to reiterate. Duty paid imported goods, if they are exported within 2 years, you get the drawback. The same benefit is applicable for as a stores as well. Same benefit is applicable even if I am exporting as a stores. Now, 2 specific cases. If I'm exporting basically as a stores, I'm giving fuel or lubricants on a foreign going aircraft, not vessel, then the drawback will be of the 100% amount instead of 98%. And if ship stores are given to the Indian naval vessel ship stores, again, regardless of what the item is, not only fuel, lubricants, everything is covered, then again instead of 98%, 100% duty will be given as a drawback. Basic import flow, I want you to learn this. This comes from an ICAI BOS MCQ. ICAI BOS MCQ. Okay, pay attention. First IGM, then in case of vessel only, entry inwards, then unloading, then bill of entry, then assessment, then duty payment. I want you to learn it. Although you know that sir, bill of entry generally would be filed prior to arrival, but you have to learn it as it is. This is a basic export flow. If you want, you can read. This does not come from any ICAI MCQ. Shipping bill or bill of export, then ensure it is not prohibited, goods are not prohibited, duty is paid, clearance and loading order, then actual loading, then delivery of EGM to the PO, and then the final return order to leave. Warehousing period. If the warehouse is where no manufacturing is allowed, it is 1 year. Okay, but interest will start from the expiry of 90 days from the order of warehousing. Okay. And if the order of warehousing is, let's say, given on 25th of May, the calculation will start from 26th only. As you know, ICAI will take it as per the GCA. Manufacturing warehousing is allowed, but it is not in public bonded warehouse. It is allowed only in a private or a special warehouse, that too subject to approval by the commissioner. In refund, just a point to be noted, interest is only with respect to the duty portion, not for any deposit. So sometimes a question may state that the refund, basically the deposit was given for some basically this project import or related anything, some project import related deposit, and it has been delayed beyond a certain time limit, still I'm not going to get any interest for that. Section number 26 and section number 26A, these are the specific cases of refund where the time limit is 6 months, not 1 year. 1 year is a general section, section 27. So these were certain points. Now certain bonus points I have covered. Please pay attention. Company supplies goods on delivery challan on approval for sale or return basis on 1st March with option of returning within 60 days. Other parties signified approval on 15th May, that is beyond 60 days. What will be the time of supply? End of 60 days. You don't have to see 6 months tax invoice. No, before that 60 days is expiring. So you will take the specific case as 30th April time of supply. And I have to ensure the GST is paid to the government. If there is an intrastate supply happening in some other state means recipient is not registered there, I cannot take the ITC. Classic example, hotel stay. I am registered in Maharashtra, but I go and stay in an hotel in Delhi. That would be an intrastate Delhi supply. I cannot take the ITC. Another example can be goods are purchased on as is varies basis from some other state. As is varies basis means there is no movement of goods happening. So let's say I'm in Maharashtra, but I buy goods on as is varies basis in Gujarat. So in that case, it is a Gujarat state intra-state transaction. I'm in Maharashtra, I won't be able to claim ITC. This I have covered. So basically, whenever there is the person is not falling under your family, okay, let's say there is a brother and he has his own factory, it means he's not family, he's not a related person. So in that case, whatever transaction value you're entering with him, you have to accept it because you are not a related person, and just ensure price is the sole consideration, right? So go to the valuation rules only and only if there is a need. Intentional lot versus unintentional lot. Please understand these are not legal terms. These are our understanding terms. Now, what do you mean by intentional lot? Let's say certain goods are sent in lots and they are coming in 5 lots. So I will ensure ITC is taken only at the end of last lot. So basically the last lot, whenever I'm receiving, I will get the ITC. But unintentional lot example, 1 lakh worth goods were sent. 20,000 worth of goods came later because of some riots in the area or there was some accident. So in that case, 80,000 I can take the ITC earlier, 20,000 I will take when the goods are received, because this is not exactly a lot. This is not exactly sent in lot. This just happened that some goods are received earlier and some goods are received later. Okay. In MCQs and in the descriptive also, always check whether the question is basically asking from the point of CGST or a total of CGST plus SGST. Governmental authority or governmental entity, I hope you know the difference and the definition, right? 90% control is there. Authority is to do the functions related to the entrusted to panchayat or municipality under article number 243G or W of the Constitution of India. Entity is to do whatever functions they are interested with. So governmental authority and governmental entity is basically the 90% equity or control by the government. But you see section 51 TDS also, they have similar words, authority or board, where the government has control. There it is 51% for TDS. Okay. Know the meanings of X factory and FOR. X factory, if the contract is X factory, means as a seller, my responsibility is to make the goods ready at the factory. Okay. Further transport responsibility is yours. FOR means transport responsibility is mine. How will this impact the answer? I will tell you. The question can be asked in such a way that the contract was, let's say, FOR, but the transportation cost was paid by recipient. So this will trigger section number 15(2)(b), supplier's obligation paid by recipient, and it will become a part of the valuation. You have to add it again. Okay. One transaction, service apartments at a daily rent. This was asked in November 20, but the logic will still apply today. Service apartments, exactly entry number 12 will not apply, because entry number 12 rent residential, basically the dwelling that we are giving on rent, that is for a long-term renting, and service apartments are given on rent for 1 day. So they are more in the nature of commercial nature. Okay, so here entry number 12, the exemption entry will not apply. If question asks consequences for non-issuance of e-way bill, sometimes I have seen people get blank that what are we supposed to write. So 10,000 or tax sought to be evaded, whichever is higher, this comes from 122. Detention, seizure of the goods and conveyance, this comes from 129. Confiscation, goods and conveyance, this comes from section 130. At least write these 3 points. Okay. Next, a question can be asked. Would the period of limitation for claiming the refund apply to the refund of amount paid on account of duty paid twice under the mistake? So let's say 100 rupees duty was due. I paid 200. I paid 100 twice. So here, will the refund application limitation period 1 year apply? Section 27, chapter number 7, refund. Answer is no. It comes from a case law, Parimal Roy. It was basically stated that here it is not an excess duty. It is just a duty payment done again. Okay, so a little typical, that's why there was a case law for it. So limitation applies to the duty or interest paid under the act, but this is a sum which is paid. Okay, it is a sum of money which is paid. This is not duty to which is paid extra. Duty I've already paid it once. This is just sum of money which I paid to the government extra. So 1 year limitation period is not applicable. Purchase of 10 Apple iPads which were given as gift to the employees, ITC is blocked. Why? If something you are giving for gifts, ITC is blocked originally itself. I hope this is clear. Okay. So this was all for our analysis for IDT HOTS. Okay. I really hope this was useful. I made this video again for you guys to ensure all these are the same points we covered in the normal IDT HOTS. Okay. So you guys did, I just wanted to ensure you don't miss out on anything. And I really hope you liked it. Ensure you're commenting the feedback and sharing with your friends, because it will help me to reach more students who are comfortable with the English language, right? So all the very best. Study well. Take care. Be safe. Bye bye.